Good morning out there. How y'all doing? I'll be on the show here at about 11 a.m. Just need some time to rest my voice, prepare for the show. Just a note here that this support is basically down here at 60208, and we did not hit the upside target. We hit our first upside target. We hit this one right here, but we didn't hit our second one. So there is room to go higher here, 60750 or so. And that's before the expected roll to the downside. Another note here too. 30-minute velocity is weak right now. It's It's turning negative. But upside gamma at 6100 is weakening. So if we get this like weakness to the downside, whenever the next trip is that we make to attack 6100, it is possible that we can break above and out and away. My thesis, or not thesis, but we've got gamma that's weakening into Friday, and we also have people are not rolling calls higher right now, so there is a window of weakness to the upside. Basically, the market is so bearish right now, heading into the first week or so of February.
US listed shares of Alibaba up 2.8% after the company releases an AI model that it says surpasses DeepSeek V3.
At 9:45 a.m. Eastern Time, we get the Bank of Canada rate decision. Forecast a cut of 25 basis points to 3% on the prior 3.25%. We also get the Bank of Canada rate statement. Bank of England's Bailey says, I don't know what reserves equilibrium level is. And we may get to the preferred minimum range for reserves later this year.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
And Bailey says the banks say preferred minimum range of reserves is 400 to 500 billion pounds, but the estimate can vary over time. And Bailey says the interest rate risk should not be on the Bank of England balance sheet. At 9:45 a.m. Eastern Time, we get the Bank of Canada rate decision. Forecast a cut of 25 basis points to 3% on the prior 3.25%. We also get the Bank of Canada rate statement. 1 minute remaining. Ten seconds. Cut, 25 basis point cut, 25 basis point cut to 3% as expected. So the Bank of Canada says rate cuts are starting to boost the economy, and recent strengthening in both consumption and housing activity is expected to continue. CPI inflation will be around the 2% target over the next 2 years. And the Bank of Canada announces the end of quantitative tightening and will gradually restart asset purchases in early March. If broad-based and significant tariffs were imposed, the resilience of Canada's economy would be tested. Cumulative reduction in policy rates since last June is substantial, and monetary policy cannot offset tariffs, but can help the economy adjust. Higher cost of imported goods would put direct pressure on inflation. Long-lasting and broad-based trade conflict would badly hurt economic activity in Canada. Potential for trade conflict triggered by new US tariffs is a major uncertainty and could be very disruptive. So the Bank of Canada cuts 2025 growth forecast to 1.8% from 2.1% in October and 1.8% in 2026 versus the prior forecast of 2.3%. And what Macklem says, with inflation back around the 2% target, we are better positioned to be a source of economic stability. We can't use rates to lean against weaker output and higher inflation at the same time. And the Bank of Canada see fourth quarter annualized GDP at 1.8% versus 2% seen in October. The Bank of Canada say inflation to average 2.3% in 2025, 2.1% in 2026. So the Bank of Canada forecasts do not take into account the potential effect of US tariffs. The bank estimates that fourth quarter 2024 output gap is between -1.25 and -0.25%. Nominal interest rate is estimated to be in the range of 2.25 to 3.25%, unchanged from October. And Bank of Canada potential output growth is expected to slow from 2.5% in 2024 to around 1.5% on average over 2025 and 26, down from the October forecast of 1.9%. And Bank of Canada notes there are already signs that the threat of US tariffs is weighing on consumer and business confidence, and it has also contributed to the recent Canadian dollar easing. A global tariff war with the US could cut Canadian GDP by 2.5 percentage points in the first year, then another 1.5 percentage points in the second year. And the Bank of Canada say occasional adjustments to the deposit rate spread may be required in the course of normal operations. And adjusting the deposit rate should also help mitigate some upward pressure seen on the overnight rate relative to the bank's target rate in recent months. Policy change is intended to improve circulation of settlement balances as they decline towards steady state levels over the coming months. So the Canadian dollar pairs declines, down 0.2%.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
So Canadian swaps market sees 47% chance of additional Bank of Canada easing in March, little change from before the expected January rate cut. And Canadian 2-year yield steadies at 2.823%. Bank of England's Bailey says we are seeing hedge funds take much bigger positions in government debt. And Bailey says there's a risk that these hedge funds' positions can get suddenly unwound. And Bank of England's Bailey says hedge funds are playing a bigger role in government bonds. Nasdaq CEO Friedman says technology is to continue to be a driver of the economy. And says we're just at the dawn of AI and there's more companies left to benefit. At 10:30 a.m. Eastern Time, we get our weekly EIA inventories. Crude oil forecast build of 2.186 million on the prior draw of 1.017 million. Gasoline forecast build of 0.245 million on the prior build of 2.332 million. Distillates forecast draw of 2.3 million on the prior draw 3.07 million. And Cushing prior a draw of 0.148 million. We also get the Bank of Canada press conference. At 10:30 a.m. Eastern Time, we get our weekly EIA inventories data. Crude oil forecast a build of 2.186 million on the prior draw 1.017 million, with a range of a build of 3.99 million to a draw of 1 million. Gasoline forecast a build of 0.245 million on the prior build 2.332 million. Distillate forecast a draw of 2.3 million on the prior draw 3.07 million. And crude Cushing prior a draw of 0.148 million. We also get the Bank of Canada press conference. And Bailey says, I'm optimistic that we will get an agreement on Basel, and we need to give new US administration some time. French socialist Patrick Canas says the Socialist Party is not returning to budget talks with the government for now, and the party wants further concessions from Prime Minister Bayrou. One minute remaining. I'll lead with the EIA crude oil inventories. Ten seconds. Build 3.463 million. Build 3.463 million, higher than the expected build of 2.186 million. Gasoline inventories. Build 2.957 million. Build 2.957 million, higher than the expected build of 0.245 million. Distiller inventories. Draw 4.994 million. Draw 4.994 million. That's lower than the expected draw of 2.3 million. And crude Cushing inventories. Build 0.326 million. Build 0.326 million.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
According to SBU source, Ukrainian drones hit Russian oil pumping station in the Tver region overnight. And the attack caused leakage of oil products and fire. Bank of Canada's Macklem says Canadian dollar movement has not constrained us so far. And Macklem says divergence with the Fed hasn't constrained policy choices. And the timing of Canadian dollar depreciation follows very closely on President Trump's threats. And Macklem says the depreciation of the Canadian dollar will start to have some impacts.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Use Pro for a year's worth of our service for the price of 1 month and save 92%.
So Macklem says there's no doubt the exchange rate is responding to the tariff threats. And Macklem says the bigger the move in the Canadian dollar, the more we're going to have to take those into account as we set policy going forward. And Macklem says we're a long way from needing quantitative easing. noting NVDA falling as much as 5.6% to a session low. And Macklem says the bank isn't seeing broad-based inflation pressure. And Macklem says there's no doubt tariff threat weighed on our last rate decision. Macklem says the more we can get the economy on a solid footing before it faces possible tariffs, the better. And Macklem says, and from that risk management perspective,
Jesus, that's loud.
reinforce the decision to cut the policy rate by 25 basis points.
All right, we turn that down. What am I doing here? All that untangled. Do. So I was taking a look at the option chain. I'm looking at the calls on the open this morning, and I'm like, yeah, I was thinking about buying some calls here. Dealers, of course, are like, which ones do you want? And I'll tell you what, they were not cheap looking. That shit was on premium. So I did opt against buying said calls. I'm grateful that I did. Hang tight here. Hang tight again. All right, here we go. Sorry about that. I've got like people coming into my office and okay. So I was looking at the calls this morning, like down here, like we're down here, and I'm like, ooh, I'd like to get some.
Macklem says if downward pressures in inflation
Check.
come through faster than upward pressures, then
Voice news. Turn that shit off for a minute. I'm like, man, I'd like to buy some fucking calls and like get a nice little run here up into 2 p.m. Normally on these Fed days, you'll get some fairly easy layup trades, but I don't see any of that this morning. And the calls off the bell were very expensive. What the fuck is going on with my hair this morning? My wife was all over me this morning. She wouldn't leave me alone. Happy Fud Day. Let's start with that. A couple side notes. Did any of you guys see Kristi Noem this morning? I'm like, I'm like, I want to remove illegal immigrants out of the United States. And I'm actually due. I'm on that. I'm in agreement with that. And I want like a path for seasonal workers, H-2Bs, to do shit that nobody wants to do. Nobody wants to pluck chickens. Nobody wants to get on a farm truck and head up the East Coast and pick apples. There's nobody in the U.S. that wants to do it, and certainly not that cheap. But I'm watching like Kristi Noem this morning. She's, it really doesn't matter who it is. It could be anybody. Anybody from the fucking Senate or the reps, House of Reps. I don't care if Democrat, Republican, don't care. She looked like a fucking clown this morning, and it's all reminding me of. It's all a show, of course, like soap opera. It's like like we're a fucking fourth world fucking country with state-run TV with the fucking photo ops. If I worked for like Fox News, I'd be laughing at her as I interviewed her because she looks so fucking stupid. But whatever. Anyways. Let's go back. Let's rewind a little bit. So yesterday, there was like a leak from Wall Street that was saying we're discussing the new NAFTA. There was NAFTA, and then there's like the USMNCA or something like that, which is a trade deal between Mexico, Canada, and the United States. And Trump's been promising tariffs on February 1st since, whoever knows when, 2016 or something. And these are important things, right? These are things that impact our market. And, Trump makes a lot of what he does relevant to our market. Whereas Biden, of course, didn't. You would rarely have policy decisions that either were not telegraphed or you get to like a Senate meeting investigating tech or something like that. But this is like, we're in like week one, right? And our first full weekend, we're already, as a matter of fact, I was looking at SPY from like the election until today, and it's a fucking mess. It's all over the place. It's wide ranging. We're introducing massive volatility into the markets, right? One Friday we come in and we get Stargate coming on a Sunday, and all of a sudden DeepSeek, and now that's being trashed one fucking day later, right? So yesterday it looked like Wall Street was trying to leak that, hey, we don't think that Trump's going to do anything until this trade agreement is renegotiated in, I believe it's July 1st. And then about an hour later, the White House caught wind of it, and they were like, "Oh hell no!" They were like, basically Trump reserves the right to negotiate tariffs from February 1st, and he's committed to instituting those tariffs on February 1st. And that's not just even a negotiating tool. We're doing it February 1st. That was the gist from the White House yesterday in response to Wall Street leaking that information. Now, if the White House had said, yeah, the president's open to leaving these tariffs to be negotiated in July 1st, you probably would have seen the market fucking squeeze tits off yesterday, had that been the case. But we didn't get that. So, and that would have also helped J-Pow to possibly be a little bit more dovish today. If anything, at least with his speak. So you really can't do that right now. If you're Jerome Powell, as a matter of fact, the Bank of Japan is kind of in a similar situation without the politics, where BofJ could raise 25 BPS, cut 25 BPS, stay in a pause, and adjust policy as needed. And this is what happens when you are in the middle of a soft landing. Data dependent and willing to act appropriately. Now, the BofJ, they're trying to push this narrative that they're going to switch their stance from being forward with expectations in advance to becoming more adversarial and not saying what they're going to do so the market doesn't price in these expectations. No, I don't know. I don't think that Jerome or the Fed is going to move into that adversarial stance at this point. But I do think that with the discussion yesterday and the way things have been working the past week or two, there's no evidence right now that, or the evidence says at this point that Jerome should be not so dovish to where you get a cut, in my opinion. And also that he needs to adjust his Fed speak to be maybe a little bit more aggressive. And this morning, someone asked me this, and I said, I think it's going to be more dovish and hawkish. In the fact that he probably needs to say today, or reinforce today that he's monitoring White House policy. Let's just say it. White House policy. Of course, he's going to say he's monitoring geopolitics and all that kind of stuff. But as a matter of fact, he should harp on that today, too. He should be harping on the impact of a potential ceasefire. If I was a reporter, I would ask Fed policy, Treasury policy, as it relates to a potential ceasefire with Ukraine and Russia, because that opens up a whole nother can of worms. And then, of course, White House policy. And the key point here would be when I say, like, emphasize more hawkish and dovish would be that the Fed chair likely at this point becomes or there becomes a higher probability of an emergency rate cut or emergency rate hike as we approach summertime, I would say, or the probability of them doing one of these two things. So, and let me give you the gist behind this. Depending upon whatever that policy is, or even let's say we've got some policy from the White House going on, and then we also have a ceasefire in Ukraine, you could get an amplification of data quickly, and you would need the Fed to act quickly if something begins to happen. You begin to see velocity in inflation, begin to see velocity at some point in unemployment, or drastic changes. As a matter of fact, you guys are you're real, right? You're not bots, you're not AIs. I went to the grocery store last week. I saw grocery prices. I don't go to the grocery store a lot, but I did go last week, and it was markedly different, right? Eggs are through the fucking roof. Orange juice is $12 a gallon, and it's been rising now for months for shitty frozen concentrate orange juice. Prices are going up. Not only that, Wolf Richter has been monitoring other markets. Housing market is bouncing right now. the used car market is bouncing right now. There are telltale signs of inflation peaking up, right? Doesn't necessarily mean that they're raging out of control as a whole, but you can pretty much look and say, yeah, we're pricing in potential tariffs from PPI and CPI, and the end result, you're paying higher prices, whether we have those or that's inflation or not, right? And that we don't know yet what policy is. We don't know what the impact is of flooding the market with oil or commodities from Russia, Ukraine, right? Well, we do, but or we don't know what that's going to be, or how the Fed would have to act in those cases. So I would think today that due to what was said yesterday, that you're going to get like, I don't know if it's quite like super hawk Jerome or super dove Jerome, but I think you'll get a reinforcement that we're ready to act at any moment. And I think that's needed from the Fed. We're monitoring these things specifically, and we realize that we may need to act quickly at a moment's notice. And I think that would be the extent. Now, I don't think he caves and cuts today. I think it's going to be pause and let you know this, like, hey, we're going to pause here because of uncertainty, and we are we're going to monitor it fucking closely. And if things get out of hand, we're going to be ready to act immediately and aggressively if we have to. Another thing too here is, like the last rate decision, he planted questions. He doesn't do that a lot. Sometimes he does it, but not that often. But you could tell point blank, bluntly, that he planted questions with specific reporters to ask. And he even like made a joke. He was like, "Yeah, he's like, I just happen to have that data with me right now, right? You just happen to ask, and I just happen to have that data." So I would expect some of that today too. More of that in a way where, or at least even if he doesn't plant it, he should be expecting those pointed questions on Ukraine, Russia, those pointed questions on inflation in particular, and policy and tariffs. They're going to press him on that stuff today. And I think you get an answer from him. I think that the U.S. public probably wants an answer from him on that. I don't think anybody wants higher inflation, right? I don't think your politics matter. I don't think anybody wants to be fucking paying $12 for a rack of fucking eggs, right? Please tell me out there that you want to pay $12 for a rack of eggs. So he has some kind of a duty to answer to that stuff today. Now, as far as market reaction, and I'm going to go, and by the way, in a few moments here, I'm going to give you some reaction stuff today, some expectations from Wall Street, that kind of stuff. That's just my take. If you want to know what my take is, you're going to get that's what you're going to get. I think that's what you're going to get from Jerome today. Now, the data that's out there, the actual data, I follow that very closely. And I mean very closely. I watch all the data. Every small data point every week I spend time on that shit. We're doing great. And I need you to know that. The United States is doing great at this moment. At this moment, take Trump seriously, but not literally. There's a lot of photo ops out there going on, like that Kristi Noem shit. Like what they're saying and what's actually the truth is way different. And this is at every corner. And not only that, right, but there's speed bumps in place to limit a lot of what they want to do. So you need to separate your Wall Street hat from your Main Street hat. This is like the zeitgeist shit with data. Constantly, I hear from people the zeitgeist about the consumer, the economy, debt, government debt, you name it. And when I go and look at the actual data, you're wrong. You're wrong. You are. You're absolutely abject wrong. So it's really not easy for you as a trader. It's really not easy for you with your Main Street hat on to decipher what's real and what's fake these days. There's so much garbage information. pure garbage. No matter who you are, no matter what table you're eating at, it's just garbage. It doesn't matter what you like. Doesn't matter what sport you like. It can be anything, a movie, a song. It doesn't fucking matter. Everything today, it's everywhere. It's rampant misinformation. And then no one checks the actual data. Nobody does. Nobody reads a fucking book or a graph. So I don't know why. Everyone likes like 140 characters, a fucking 2-minute video, a picture, or someone to tell them what it is without checking it, or they don't know how to check it. And then it becomes regurgitated crapola that we speak. So, and that sucks. Used to be you could get like 2 sources of information and then figure out what the real truth was. You can't do that anymore. It's not like that anymore in this world. The world has changed. It's been changing now for probably 15 years. And they're getting really fucking good at it. So, if you want to, like, with this rate decision, do you think the economy is good or the economy is bad? The economy is good. And the economy is just showing the signs of beginning to run hot. And there's always an eye of the needle with that. It's just like COVID. When you watched inflation rise, there is a time where the market will go up with inflation. There's a time where we need workers, and wages will go up with needing those workers and inflation. Wage price spiraling goes up and down with inflation usually. If that figure hasn't delineated either. I looked at wage prices and wage against prices, and they've been following inflation the whole way. So, if we're running the economy hot and you have lower unemployment and wages keep up, and GDP looks good and we're fighting debt, you can run this shit hot. And I want to say something else to this. This is like the 3rd or 4th time I've seen this. I read through the GS yearly expectations, and they pointedly mentioned that we're in 1928. And there's this thing where, like, politically, the president, the House, the Senate, the governors are exactly what they were when Hoover was president. And a lot of Hoover's platform mirrors the platform today. It's like an old playbook. And Wall Street keeps playbooks going back since the beginning. I don't know if you know this, but like Wells Fargo has been here forever. JP Morgan, been here forever. They helped with the growth of the United States way back in the day. They keep this information. What was the playbook at that time? And fascinatingly enough, Dan Ives yesterday mentioned we have like 2 more years of a bull market. And I like whipped my head around when he said that. There's a thesis out there that this is not the last year. That we got 2 years of it. And it's not just GS, it's other guys out there saying we might have 2 years of a bull run here. And you should go back and read up on the history of Hoover. He actually implemented his policies later on in his presidency. The actual implementation, the promises that actually passed and were enacted were the last half of his presidency. And we ran up for 2 straight years, almost vertical the second year, to a blow-off top. And then we topped, I believe, in October. We had Black Monday in 29, I believe. So 28, 29. We ran that fucker up all the way up into September, October of 2029. So he's not the only one thinking this. Now, I think we got 1 year left, maybe. And we got volatility being introduced into the market. But we're not in next year, are we? We ain't there yet, are we? We're in this year. And we're in this first quarter. And we're at the end of this first month. And we got 2 weeks left in this week. And that shit doesn't matter today, does it? And this also looks a lot like the late 90s, doesn't it? It looks very close. And there's some stuff that looks like 2018, doesn't it? With Trump 1 presidency. So there's some like, it's not exact, but it looks kind of close, doesn't it? And the data out there looks a lot like the mid 90s. Data looks good. We have a healthy economy. We have a new president. And a lot of the shit that he's promised really hasn't truly come true. If you look at the data on immigration, it's just fluff. It really is. I'm sorry. I know that Democrats want to rage about that, but it's not the reality. He's removing less people than other presidents in modern history right now, believe it or not. There's no logistics. There's no funding to do anything else right now. And not only that, he's actually pissing some money away doing it, spending. And this whole Fed thing with the furlough or the buyout or whatever, the fucking federal government's not even funded through the summer. There's no way to pay people 9 months of severance now. We don't even have it in the fucking budget. It's a scam. Like everything is a scam right now. It's literally everything is a fucking scam. Everything is a fucking scam coming out of the White House right now. Now, can that become policy that's enacted down the road? Yeah, we'll deal with it when it does. The rest of it is just making some of you very happy and giggling, and the other half of you freaking out. So the economy is good right now. And if anything, I would expect rate hikes from Jerome in the future. If we run it hot, this economy gets moving, I don't see why we wouldn't hike. You know, if inflation comes down, sure, we'll cut. But I wouldn't be surprised to see hikes in the future. So I think the Fed today needs to take that, have that hard pause. I guess if there's Hawk and Dove, there's a number 3, which is a hard pause position. So that's my take on the rate decision today. A hard pause. That means where he's willing to do both. He's willing to cut. He's willing to hike. And above all else, maximum employment, right? Inflation target of 2%. And monitoring geopolitical and political policy are going to be key speaking points today. Now, there's something else going on. There's a lot of fear in the market right now. There's a lot of thoughts that, Trump's going to fucking hammer Jerome today, right? If he doesn't cut. If you don't get a cut, Trump's going to come out and go fucking bananas, right? And also, we have the threat looming of tariffs on the 1st. Trump knows very well that we're expecting volatility that began on Monday and should last into at least the let me just make sure I get my dates right here. That volatility should last until at least make sure I got this right here. Until at least possibly the 14th of February, but at least like the 5th. We got jolts on Tuesday the 4th. We got a bunch of ISM, personal income, interest. We got a bunch of shit going on, right? We got volatility. We got volume coming in to the. We've got some volume coming in the market right now, but we have like 401k volume coming in beginning of the month too. We got Trump knowing that if there was a time to drop bad information or bad news, it's right now. This is when a company will. Or not a company, not necessarily a company, but the federal government or the president or whomever can dump shitty stuff on you, and it's a good time to do it right now. Everyone knows this, so there's a panic going on from the public, retail traders, and investors, regardless of politics. I saw it on FinTwit last night. We could crash tomorrow, limit down tomorrow. I understand that fear. I get it. I get it that you're being astroturfed everywhere. So that's on the table too right now. So we've got an FOMC meeting today. We've got heavy data heading into the beginning of the month or beginning of the month. You've got traders that are front-running volatility, whether it's realized or not. We have volatility that comes off the market after today, and it's still a jagged line as it comes off the market. It's actually showing like a spike in volatility today. That means a down day today. But then it also shows as vol comes off the market that we're going to have a bumpy ride along there. Now, on top of all of that, we also have what? We've got earnings season. All right. And what did they do for earnings? They were buying earnings in September, October, and November of last year, and they wrote it up. They fucking wrote it up right into last week. And they exited. Think about this. Momentum comes from institutions, right? They took the ride all the way up into last week. They took their profit and walked. So who's been buying? It ain't them. It's retailers. Retailers bought yesterday. That's who bought. That's who bought on Monday. Retailers. So they're just looking for another dip buy. The institutions are just sitting there going, yeah, we got probably till the 5th, maybe the 14th. We'll probably get a dip we can start accumulating. And what did they get on Monday morning? They amplified shit, didn't they? Deep star 6 seek, dipshit 10, whatever that thing is. Amplify a down move on Sunday and Monday. They're down there accumulating. They got shit going on today. They got ERs going on this week. They have all kinds of opportunities to get long for when? March, April. That'd be a target, right? Probably putting calls on right now and buying shit for like June or July. Well, we'll try to catch a print in March. If we don't catch that print in March, we'll run it up into July. We'll get our print then. So I want you to think about that, where we are, the beginning of tech earnings, gambling on these earnings, and what they're doing. They're trying to position for a print not today for Tesla. They're trying to position for a print in late March and a print in June, July. So I want you to think about that when you're buying these dips. What's your horizon and timeline? Are you trying to go with the momentum of banks? Or are you fucking around with retailers? And when you look at days like today, or you look at days like Monday in the morning, right? You should be looking at these as, hey, I did my homework, and this is the price I want to pay for this list of stocks or indexes. And if I can get the price that I'm happy at, I'm going to begin an accumulation. I got $100. I'm going to buy stock X here at, I don't know, $20. I'm going to spend $30 on it. I'm going to spend another $30 if it hits $15. I'm going to spend another $30 if it hits $10, and I got $10 in my pocket. And I'm looking for a print in summer. If I can get it before, sweet. Baba, baby, by the way. Baba. Think about Baba. I had that on my list in the Discord last week. On my list, buy Baba. And what did I hear being talked about? Can't do Baba. They haven't priced in China yet. I'm like, they already fucking priced it in. You can see it. They priced in China tariffs. The fucking thing went not to zero, but down to fucking where its support is. They literally already priced it in. What did Baba do today? Fucking moon mission. Woo. And it ain't done. So I need you to think about these things like they're front running. The Wall Street right now is literally front running a stoppage to the war with Ukraine and Russia right now. They're front running it in the background. Think about that. They're running up a basket of stonks right now, commodities, on an end of hostilities. So let's say ticker X for an end of hostilities, right, is at $10 right now. It's been run down because of the war and sanctions and all this shit. So they're front running it all. So now that $10 stonk is now worth 50. When they go to announce the lifting of sanctions and a cessation of hostilities, what, that stonk squeezes for 1 or 2 days? Woo! Retailers are sucking each other off. They jump on that trade for 1 day. It squeezes. Meanwhile, they're exiting that trade. We call it a liquidity grab, right? In reality, they're selling into you. You're the bag holder. So you might get 1 day, 2 days of an up market. Been riding that shit already. They did it with BABA. So you want to always be thinking about where are likely the institutions at. They're the source. Hedge funds, right? High net worth individuals, banks, family offices. They're the ones that are already accumulating this shit when it's in the dumpster. By the time you get to it, you're the fucking bag holder. So, they're the source of that Momo. And you are the source of the last part of the Momo. They're already in at the bottom. So think about that stuff like today for print in late March. Think about it on this past Monday. We knew about this on Monday of last week. So that this was it. Like, come in a Friday, get out. We knew, get out by 12:30 to 1:30 on Friday. Now you sit back and wait for a dip to buy. If it doesn't come, it doesn't come. And it started to come, right? If we begin to go higher and get a new all-time high and a good back test, we know that it's done. Vol's done. It's now right tail risk. And we're going to start running up into March and April. So that should be the stance of you right now. Now, some of you are panicking. Some of you are on fucking FinTwit saying market crash, top is in, doom, 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 doom. I talked to you yesterday about why the fuck are you in the stock market? You go to work every day, you save some money, you put it in a 401k, or you give it to someone to manage for you. Then one day you say, you know what, I can make more money off that money myself. So I go into the stock market, in a bull market, and you have to put risk on. Why? Because the herd is there. Wealth is there. For outsized gains, risk on and outsized gains. Why? Because we enter periods of what? Tightening, high inflation, stagnation. And you take your money out of that risky environment and you try to preserve it, don't you? So you shuffle on over to bonds. Now your money's not making any money, is it? You're just trying to beat inflation. Then you see the housing market crash, so you put the herd runs over there and they buy cheap property, right? Then all of a sudden the stock market is cheap again, right? And they come back to the stock market and create another bull run. If you don't fucking participate in that next fucking bull run, think about what's going to happen when we get into a tightening cycle, high inflation cycle. All that money that you're shifting didn't make any money in a bull market. And now you're just trying to fend off inflation. You know what that leads to? Decades of stagnation. Of the money that you chose to took out of a protected 401k or a managed savings. Right? And you didn't make any fucking money. So we are in a bull market. That's where we are. And when we're in a bull market, you must make returns. So when you get into a bear market, you're up. You're preserving your wealth. So don't be listening to these fucking people. These fucking people are talking about limit downs and shit. You should be smiling. Fuck yeah, bring it on. I'm ready. I want to buy the fuck out of it. Because we're in a bull market. The economy is good. GDP is good. Debt is good. No matter what they're telling you out there. So you should be welcoming of these moments in a bull market of volatility. And be ready to fucking buy. And let them spin any bullshit they want to get it down. Do not fall in the camp with these fucking bears. These are the same fucking people, right, that will say it'll be back, bro. They missed the last 2 fucking years. At every major low in 2022, the banks were fucking buying. They bought in April. They bought in June and July. They bought in fucking October. While you were down there on fucking FinTwit, oh my God, the world's gonna end. And they're making bank. You have to make money if you're in the market, managing your own money in a bull market. What the fuck are you gonna do when we go to a fucking bear market? What are you going to do? Oh, I made 10 grand. Where'd you make it? At work. What'd you do during the bull market? Oh, I was too scared. Well, we're in a bear market now. What are you going to do? I'm protecting it. Wait a minute. How long ago was that? 10 years ago. Wait a minute. You're telling me that you still have $10,000? Well, maybe that's 15 now, but, you know, inflation's been going up over those 10 years. So it's worth the 10 that you put in originally? Yes. Okay, so why didn't you put risk on in the bull market? Well, his fucking bears were talking to me. So you should not be panicking in these moments. You should be welcoming volatility. Bring it on. Give me 10%. Give me 15%. Give me 20. Give me 30. And remember that a crash or a major correction, a double correction, is not the fucking same as a bear market. They're 2 different things. They're not exclusive. If you remain in a bull market and you have volatility, it's an opportunity for you to max your gains or hang on. If we enter a bear market, you're going to know it. You will see a fundamental, major directional change with the monthly trigger, the blue line. But if we go down there, you buy the fuck out of it until we get under it, until the triggers daily, weekly roll over it. We go down to the weekly trigger, you buy it. Your stops are under the monthly trigger. Your buy zones are the daily trigger, the weekly trigger, and the monthly trigger. And until that fucking monthly trigger even goes sideways flat, it's still fucking vertical. Price is above it. Price, daily trigger, weekly trigger, monthly trigger. Those conditions are a bull fucking market. So you welcome volatility. Bring it down so I can add more. There's more legs in this fucker. I don't see the monthly trigger going flat. It's still fucking vertical. Let's buy it. And hang on tight. Now, the day that daily trigger rolls through that weekly trigger and that weekly trigger begins to roll through that monthly trigger, they still give you an out. These are elephants. They're not you. They're not nimble like you. So all of a sudden we blast down below the monthly trigger. Guess what they do? They bring that shit right back again. 1 month, 3 months, doesn't matter. We go back to that scene of the crime, even if we enter a bear market. Every time. Even in COVID. There was one last gasp going up. And that was a violent move down. So what do? You welcome volatility. Won't be drinking that shit Kool-Aid on FinTwit. I don't give a fuck how many followers they have. I don't give a fuck what they're selling. I don't give a fuck if they're on CNBC. I don't give a fuck if they got a Substack. I don't give a fuck if they're a reporter for fucking WAPO and Bloomberg and whatever the fuck else is out there. They're all selling you a fucking story. It's garbage. And it's meant to pull at your fucking emotions and your fears and your doubts and your brains. And give you like counter stories, and they give you data and crap and all kinds of garbage. And you're like, what do I do? You can put a fucking hedge on. If you're that fucking scared, no one told you what to put on? Boy, they had no fucking problem writing you a fucking litany of reasons why we should crash. Do they even tell you how to protect yourself? No. So, today we've got the rate decision at 2 p.m. 2:30 we get Jerome Powell coming out to help talk you all down. On Thursday we get GDP growth rates, quarter over quarter, the advanced numbers. On Friday we get core PCE and personal income, personal spending. On Monday we get ISM manufacturing. On Tuesday, critical information. We get JOLTS. On Wednesday the 5th, we get ISM services. On the 7th, we get non-farm payroll. And what else? The unemployment rate. Biggie on the 7th. On the 12th, we get core inflation, month over month, year over year. Inflation rate, month over month, year over year. We get PPI on Thursday the 13th, and retail sales on the 14th. So we got big inflation numbers. We got big unemployment and employment numbers coming out on the 7th, the 4th, the 7th, and the 12th. And maybe the 14th too. All pertinent information. I'm going to read you some of what Wall Street thinks about today. First, I'm going to start with some gamma. Market gamma does not become materially positive until it can move past 6,100. If prices drop below 6,000, we take it as a risk-off signal. So if we trade below 6,000, there's not many air gaps down below. And I don't mean like dip down there. I mean like go down there below 6,000 and then make a new low. We get risk-offish. Another note on gamma. Gamma is weakening above at 6,100. It was pretty strong yesterday. It's weakening as we head into Friday. On tariffs, scratch that one. On the meeting today, GS, U.S. Treasury's trading desk. This meeting is one where I would expect the Fed to maintain optionality. So not hawk, not dove, pause. Optionality. We are approaching a pause as the market attempts to come to terms with a higher neutral rate where only consensus view seems to be lower by some amount, with an embedded option on exogenous shock-related easing. Until we see more data and see more of the actions of the new government, the monetary policy side is going to feel a little bit on autopilot, holding steady, while fiscal actions, issuance, and more durable growth are likely to continue to add term premium to a generally historically flat forward curve, i.e. buy TLT. They're going to spend. I know they told you when they were getting elected that they weren't going to spend, but they are going to spend. The market remains in wait-and-see mode, with mega-cap earnings from Microsoft, Meta, and Tesla set to drive sentiment after the close. Additionally, the Fed's rate decision at 2 p.m. and the Fed Chair Powell's presser at 2:30 will be critical. No changes to rates are expected, but investors will be looking for any signals on a potential March rate cut based on Powell's tone. Near-term market direction will hinge on whether mega-cap tech delivers strong results and if the Fed keeps the door open for policy easing. I want to also note to you, it's not in this note, that Wall Street, the reporters, and all of these guidance questions that you see out there from investors, you know the guy with one share of Tesla who wants to ask a question of Elon, they're going to be asking what? What matters in these earnings? They're going to ask about deep shit, right? They're going to want to know about CapEx, aren't they? So pay very close attention not only to FOMC today, but be paying very close attention to companies. Or they're going to be asking Elon about Grok and all this other shit, right? They're going to be asking Google, Microsoft, later on NVDA. They're going to be asking all these companies, hey, we want some information here. Does this fucking thing matter? Back to Gamma again. Hold on here. I mean, one quick moment here. I thought I had this queued up, but I didn't. If you got the brief yesterday before the close, I did instead of doing a brief on the show yesterday, I did a brief and I posted it on the website to give you the opportunity before the close yesterday to do what? What did I show you in yesterday's brief? To hedge today, right? So you had the opportunity a second time. On Friday, I told you to get out. Told you don't be surprised if you see the market down next week, right? On Monday, Tuesday, Wednesday, Thursday, and right up into about 12 o'clock on Friday, I told you to get out, right? Hopefully you did and made some money. I know some of you did. And then yesterday, what did I tell you yesterday? I'm going to go up there and tap those two things. I'm going to roll down, right? Hedge yourself. Well, traders added some protection ahead of the FOMC and market moving earnings results after the close today. Markets remain in a wait and see mode. SPX daily gamma is at 490 million. The gamma flip negative is 6030. We'll talk about that in a moment. Like dipping down for a dip buy, right? If we begin to lose 6,000, start going risk off, right? Judging from the short-term option distribution, the main gamma resistance level can be identified at 6,100, while 6025 will act as an inflection point, and any drop below that level would likely lead to a substantial increase in volatility. The release of deep shit in a variety of other top-notch models over the last couple days, Baba. You know, this is like talking AI. All you got to do if you're Meta, if you're Mark Zuckerberg and you're watching the show right now, you just go into your guidance and all you say is, we released a new model. And Meta will go moon. The release of deep shit and a variety of other top-notch models over the last couple days are still puzzling the markets. And company-level guidance assurance that justify current multiples is probably crucial for the future path of stonks. A key stock to watch is ASML, which is currently trading 5.6% higher, following an earnings beat plus inline revs. Let's take a look at Gamma really quick. There's SPX. Gamma flip right here. This is the jump point on the 28th at 11:30 in the morning. Right at 11:40. This is about 10 o'clock in the morning on the 28th. This is local support at 6020. The daily trigger is roughly at 6,000. We can trade all the way down here to the island in the sky that David AMS likes to discuss. And we're good to go. This is the Monday low. This is where demand came in. Whoop, right there. So Monday open, right? If you're looking for a dip buy, this is it. If we begin to trade, boom. Uh-oh. We need to see another low to go risk off. It's not good enough to dip your wick down here and then have a big fat candle, right? One wick does not make risk off. So if you're a bull, you're down here waiting to buy a dip with stops underneath. If we begin to lose support, you can cut your losses and look lower. Now, for right now, the put wall today is at 5,900. This is 5,925. This is technically bottom of the market at 58.50, but there is more gamma that will become important lower than that point. If we begin to lose support, you will see put gamma matter again. When I looked yesterday at all the indexes, what I saw was small caps being set up to sell. The Dow Jones was front run. Qs has room to squeeze and roll. SPY has a little bit of room to squeeze. I would say that they underperform, but have the opportunity to go lower into next week, the 5th, possibly even the 14th. So all of those indexes to me are priced appropriately for where we are in the market. Trump comes out and says some crazy shit on the 1st. We're doing 100% tariffs on everybody. Okay, market can roll. It's free to roll down there. We're going to look right now on the trigger screen here. And we're going to do this together. I'm going to delete everything here. We're going to do it all together. We're going to produce an outlook for you today. It's 11:49. We're going to produce an outlook for you. The best of our ability. Not quite a crystal ball. I ain't got a crystal ball for you. Let's look out in a month. See what we can see. January, December, November, October, September. So banks came in here and they partied. Wham, 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 wham. Not bad, right? Not a bad day, is it? Bought at 530. Trading a peak of 610. Pretty good returns, huh? Now we're in January, heading into February, and they're looking for a print at the end of the quarter. Maybe it takes in a June or July, and they're looking for a dip, aren't they? We got a dip down here for them to buy already, didn't they? They bought right down here at 580. Not bad. Fairly good. This is where they were buyers, right here. On this candle. So we're going to snap a line down here. Whoop, right there. If I was a bank, I would want to buy right here. I'm greedy. I like cheap shit. I want to buy 562. That's where I want to buy, right fucking there. On a weekly basis. Hey, look at that. Close by. Right there. I guess I'm not the only one that wants to buy down there, huh? 562. We already know that they bought right here. We already know that they bought down there, they bought down there, and they bought right here. We already know that they bought right here. They bought 582. They bought 574. They bought 562. They're doing pretty good, aren't they? Buy, 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 buy. Bye bye. They bought right here. They bought right here. And now they want that juicy. Buy right here. Buy right here. Buy right here. Right? That's where I'd want to buy, right down there. Daily basis. They started this on Monday, right? What do we know here? They started buying on Monday. If those buyers leave, we know that the next set of buyers is where? Here. That's that gap. Here. That's that weekly trigger. And if we're going to go down here, we might as well go down here, right? So this is basic support. This is the next stop, 562. On an intraday basis, we're red, but they are wicking this currently. We got some sellers up here. Oh, hedge buyers or openers or condors. Nice little range, right? Not bad, right? Swoop down here, worst case scenario, swoop up. Nice little range in here now, huh? Are we in a bull market? Yes. So we shouldn't go any lower than right in here, right? Where are we headed? That way. Up and to the right. So if you can get a deal down here, let's get a deal down here, right? Let's look at a 4-hour. We got those little bears up here. Doom sellers. We got some interest in longs here too. We got more bears than bulls right now on an intraday basis. Hourly basis. Not much holding us up here, huh? This is kind of it, isn't it? It's kind of it, right? We lose 606. If we lose 602.19, look out below, right? There ain't shit down there, is there? Can see support clear as day, can't we? Look at this. Sell, 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 sell. They want to break the support, don't they? This is where you buy and your stops are just underneath, isn't it? See it? And where are they trying to send us? 596. See that? Trying to send us all the way down here. 596. You lose that. Woo! Trading all the way down here. Woo! There's some speed bumps. There's a gap right here at 567. There's a weekly trigger. There's the instigation move on Monday. We already know from looking at Gamma. Well, that's it, right? You probably get a better read on where this is on futures because it was much lower on futures, right? So maybe a little bit lower. Starting to come up with a plan here, aren't we? And what do we know? We have volatility, right? We got Trump, White House, FOMC, earnings. We've got learn language models, right? We've got guidance questions. You can see the doom above. They want the lower prices, right? Even if we get a squeeze today on a positive FOMC, even if we get good earnings today, just like this downside wicking action, remember what I just said to you? It's not good enough to get down here. You need the new low. The same thing holds true on upside. So let's say today you get a dove Fed president or Fed day today. And let's say you get a good earnings. Going up doesn't make a new trend, does it? You need to go up, back test the hourly trigger, and start going higher again, too, don't you? Because volatility has not passed. We don't know about tariffs yet. So you could get sucked back down in here again, find out there's no tariffs, then we're out of here. So not necessarily going up, down, and up again and to the right, are we? That doesn't happen until we go right tail risk beginning of the month. And volume comes in, and then volume disappears, and we go up and to the right into March, April. So this even says we're not done yet, right? We're not done yet. Expectations. Just 600. Here's gamma. That's that top tick up there, right? Yeah. Hold on a second here. 10, 11. Twenty-eighth at 10, 11. Show you guys what I'm working on. Sorry here. This is 10 o'clock here. This is the gamma flip right here, right where that zigzag is. That's gamma flip where I made that zig. So again, we break through the gamma flip to the local support. Come back up, grab the hourly trigger. Slam down below the 6,000. Woo! Risk off. And that's roughly where like zeros and fives are in cash market. We have like order, like if you look at a book map, not futures. If you look on cash market, like SPY and Qs, there's always order blocks in cash market down below at 5 or above and below at 5s and zeros. So right down here, we're going to come back up here. Whoop. And this is where the gamma flip is, right? And we'll know at that point if we're going to make a leg lower. So watch that right there. That's the hourly velocity. If we reject, that would send us down to a new low, and we'd be hitting 562. So right in here, this one right here, watch this closely, right? Sorry, wrong one. So right in here, there's your 600. Here's your hourly trigger. Whoop, right there. We're going to make this a dotted line down here because we don't know yet, right? And there's our target, isn't it? Matter of fact, they would put you into some consolidation. Bam, 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 bam. Then whoop, down, down. And look at where this is over here. This is what? 10th, 12th. Exiting volatility. New month flows. Yeehaw, baby. We're out of here. Now, this over here. Let's say you get a Fed chair, Powell, and he's hawkish. Whoop, straight down. Back up again. Still in line, right? Dovish, Fed chair, Powell, right? Whoop. Good reports. Yeah, baby. But right back down again, right? Start getting out of big tech earnings. There ain't much left, right? Start fucking around in here, and then boom, Trump comes out, gives you some horrible news. Let's say dovish Fed. Every earning is a fucking rock star. Trump comes out later today and says, no tariffs for anybody. All the data is good. Everything is awesome, which we know it is. We know it's just a scam to get a better price. If we didn't do that, this fucking stock market would be trading like $1 bazillion, wouldn't it? We know it's already a scam. We know things are good. We know the data is good. We know the economy is good. Let's just pretend everything is great. I will change my opinion of this downside move if we go up, make the new high. The hourly trigger comes up. You have a nice, sexy little back test over there. We start making our way higher. All right, I'm a buyer. I'm good. Let's do it. Woohoo! Let's do it again. Risk is gone. No problem. But until that volatility leaves, my opinion is bam, bam, ba bam, bam down there. And man, it's going to be sexy. Oh, yeah, baby. That's where it's going to be right there. Look at that. It's going to be fucking sexy. There's March. Way over there. There's going to be a general trend up into March, April. Give me a fucking beautiful thing. Wham, wham, wham. Give me a print in March, April, baby. A big fat one. Now, let's look at one last thing here, okay? We'll look at the last thing here. Maybe I'm wrong. Now, I want you to know that this is traditional charting. This is ICT. It's Elliott wave. It's gamma. All that shit's wrapped up in here. Now, we have one last thing to look at. Velocity. Daily velocity, neutral. No help. Hourly velocity. Becoming bearish. It's looking for a dip. We got that charted right here. That's it. Little bump up for today. Maybe another little bump up for tomorrow's tech earnings, and then whoop, right underneath. right? Back up again right there, right? Whoop, back down again right there. Seems to match, doesn't it? Right there, right there, coming out, swinging higher, climbing higher now. Kind of looks about right. Daily velocity or weekly velocity. Now this here is improving. This is telling me on a weekly basis that they're accumulating. There's June, July. There's June. Weekly's telling me that no matter what downs we have coming, no matter how bearish I write this, no matter how ugly I make this look, that this is accumulation and not distribution. So whatever doom this might happen here, I would not be too concerned with it. They just want a better price. That's it. Do they get it? I don't know. I don't have a crystal ball on what the data is going to be. I don't have a crystal ball on fucking what they're gonna make Stargate important today. They already knew about Stargate. Do I know? I have no idea. Do I know that what Trump's going to do? I have no idea. Do I know if they're going to have a true ceasefire? I have no idea. But I know that if we go down, they're trying to accumulate for a big print in March and in June. Or not June, July, excuse me. They're looking for a print. Who? The institutions, the hedge funds, CTAs. Commitment of traders will improve down there. Oh, yeah, baby. This gives us even a little bit more room, doesn't it? Downside expectations on a Fed move today, 599.97. Upside move, 607.50. $15-minute basis. Looking good. 2 p.m. There it is. 2:30. Get a nice little bump up here, trap your ass in, wham. Straight down there. If the news isn't too hawkish, whoop, get us back in there, trap us in for the close. Get a good reports after the bell. Woohoo, baby. I can work with that. Hell, you could extend this out to Friday, couldn't you? Or Thursday. A lot of room to work here, isn't there? Let's talk about CTAs. They're trend followers. They follow trend. They will become buyers above 6,100 they will become sellers below 6,000 on SPX. We know this is support, right? That's support. This is it. If you're going to be a buyer, this is where you buy. Ready? Ready? Fear, FOMO. You know what your brain tells you? Not going to buy, want to buy all of it. Not going to buy, want to buy all of it. What your brain should be? Buy, sell. Stops underneath. One thing I will say is we're coming into an event at 2 p.m. Oftentimes as we trade up here, they'll fuck you. So just be careful of, a trap. They'll rope your ass into 2 p.m. The dealers are out like sharks today, waiting to fuck you all day long. Couple other rules for today. I want to talk about a few other rules for trading days like today in FOMCs. First rule is what? Trading heavy data days, don't do it. It's better for you to either open up like a condor or a fly that's very wide where you think we can trade and capture all of that, right? Option number 2, sell a rip. That's being a reaction trader. Buy a dip. We're getting news. Why bother predicting it? We squeeze tits off, we go to the moon, you short it. We go down to the depths of hell, you buy it. Make sense? You don't have to predict anything, do you? So days like today are good days to be a reaction trader. Days like today are horrible for 2020 hindsight vision. Oh, shit, Cap, I should have got long with 0-day calls. It went to the moon. Don't ever do that shit. It's poison. What are some other rules for days like today? What are your rules for days like today? Tell me. I'll tell you 2 more. Dealers are out today, swimming around, and they're like, hey, you want to call, man? They're $1. They're 40 delta. Well, sir, like 0 dates are 40 delta 0 dates are like, you're like 20 cents, man. I can have like 10 sometimes. They're $1 today. You want them? So we know that options are overpriced. Well, then I'll take a put. Oh, those are overpriced too. Sorry. And what do they do after we get these data releases? Positive most of the time. We don't actually hit the target, do we? Just before the target, they'll stop it. They roll it down one more time on you, right? They literally fill the market with supply, don't they? And what happens? And they got a gremlin back there. He's like, "Oh shit, the volatility's passed. We don't need options to cost $1 anymore. We want to sell them for 10 cents now." And you bought them for $1 at 9 a.m., right? 9:30. So you're like watching the market go up and the price of options go down. Your 0 dates, right? You're like, wait. Directionally, we're gonna go like we're trading 607, man. I bought them down here at 602. Sorry, nobody wants them. Show's over. Boys, get out the vacuum cleaners. Dirty Mike, get over here. Thank you for playing. We only have 10 calls left available. I'm sorry. So you got to be quick. If you're going to be a gambler today, you got to have defined targets. Define take the money. Upside or downside targets and maybe even sells Let's say you're like, oh, I bought a put for 10 cents. In my mind, I want to take 50 out of that. So you put a sell order in at 50 cents. You take the money and you run. You don't care if it goes to $1, $2, because there oftentimes in that target you have, it's going to go to like fucking 52 cents and immediately reverse. So have like defined money-making strategy. I think it's going from here to here. I'm going to get out before we get there. I made my 100%. I'm happy. No 2020 hindsight trading bullshit. You're going to lose, statistically, you're going to lose more than you ever win in these type of events, even if you're right. If you ever want, we have a Discord. You can join our group. We have we've got tradethetrigger.com. We got cool tools in there. We got premium bots. We got like unusual whales, trading ticks, gamma tool, a get BB bot, all premium versions. We got a cool community. We got very smart traders in there. You ever want to hang out and join the discussion? I join the discussion with them all day long. We trade in there. Everything. Trade futures, trade spreads. We sell spreads. We do flies, condors. We own and sell stock. We get bearish. We get bullish. We get neutral. We sell options. All of it. Whatever your poison is, we're in there every day, 24 hours a day. If you're looking for a community, if you want to get off FinTwit, you want to get off Reddit and Wall Street Bets or StonkTwits, if you want to meet people but don't want to fucking troll you everywhere, they actually want to meet you as a person. You don't have any friends in real life. You want someone to trade with every day. It's cheap. I think it's like $28 or something. We give you manipulatable charts with triggers and velocity. We give you some pivot shit. Pretty cool community. If you don't like it, if you want to sign up and you don't like it, I will refund you your money. Join it, try it out for a month. If you're like, Cap, I tried it for a month and I didn't like it, send me an email. I don't like it, Captain. I'll refund you your money. It's like a fucking free month. Just sign up. Like all the trolls on FinTwit, all the bullshit on FinTwit, Reddit, Wall Street Bets. Each place has its own cool thing, doesn't it? I go on Wall Street Bets, I shit post. I go on fucking FinTwit and I fuck around. And then I go back to my Discord with my friends and I'm like, what's going on? Can you explain this to me? What's that cool shit from the Bloomberg terminal? What's that cool shit from BBG? What's that cool shit from... What do you got there? I want to learn this. What do? You trade what? Trade bonds? How do I get into bonds? Buns. You trade Globex where? In Europe? Europe all night long? TradeTheTrigger.com. We have the show on Monday through Friday, 9:30 to 4 p.m. I try to be here every day. This past year, outside of fucking tornadoes and shit like that, the show was on every day this year, even if it was self-guided. Yeah, we had a couple hiccups. We were open all last year. We had a show almost every single day, 252 days, I think. Even if I wasn't here, self-guided show. So if you want something for free, just a companion piece, I'm here every day. You don't have any friends to trade with or someone in your house or in your office. We do this every single day. So if you want a voice in the background, you're like, you know that guy, Captain Jim James, he sucks. But I got a guy talking to me all day long. I'm here. You want a shoulder to cry on? I'm here. It's free. I don't sell Ginsu knives. I don't have any sponsors. I get emails every day for that shit. I don't sell you anything. I don't have any fucking endorsements from Bookmap or from TradingView. I don't have links to make money off of you signing up for that shit. It's free. Always be free. So if you want like somebody with you all day long, I'm here. You want to like celebrate with somebody, I'm here. You don't want to listen to me all day long and just stop it and say, fuck you, Captain. Market's crashing. Stop on by. You want to come in and say, Captain, I just made $1 million. Give me a high five. I will. High five. But I'm a voice here for you every day. Or most days when I can be here. Sometimes I'm fucking I get like doing this every day for 6-7 hours is brutal. So sometimes I just can't do it. I got a wife and kids and I got a life. I got 2 dogs. I got 2 cats. I like to ski and hike and bike. I get hurt. I get sick. Lose my voice. I eat gummies and go wacky. So I can't be here all the time, but most of the time I'm here. Past year or so, I've made a point to improve on the amount of time I spend here. I spend a lot of fucking time here in this market. Every day I eat, shit, and drink stock market. That's all I do. So when you see me on Twitter and you're like, what the fuck is he saying? It's because I fucking spend 18 hours a day eating shit and drinking the stock market. I need a place to cool off. I need shit to talk about. So stick around. Hang out. Keep coming back. Especially if you're bored. Trading is a very lonely thing, isn't it? Can't tell your fucking wife. Can't tell your fucking husband. Can't tell your neighbors. Can't tell your friends. Can't tell your sister. I know you can't. And they don't understand. You can tell me. You can rage at me in the comments. I fucking hate this. And I fucking hate that. This and that. You guys, you're retailers. Professionals think you're fucking losers. You didn't know that? They don't like you. You're a pariah. They want you to hand them your money, and they want to manage your money. They think you're dumb, stupid. You're dumb money. When they get together and chat, they make fun of you. I know these guys. I'm friends with them. They make fun of you. So be good to your fellow retail trader. Be nice to your fellow retail trader. That's your support network. You have nobody else. If you were to tell your neighbor, like, I just lost your salary this week, bro. They're going to think you're fucking crazy. You tell your brother, I just made your fucking 5 years of your salary this week. What'd you do with it? Did a bunch of cocaine. I bought a Lambo. Can't tell them that. You got nobody. You got us. Nobody else out there. They're never going to understand you. Never going to understand your pain and your happiness or any of that stuff. So I know it's a lonely profession. It really is. So if you want somebody to hang out with, you got me and these people that sit in our chat every day. They sit on YouTube. They sit on Twitch. They sit on Trevo. They sit on Twitter. They sit in the Discord. And they all know each other. Been hanging around here for years now. And they're a very welcoming community. I used to be a part of all kinds of different communities. I was part of communities that cost me like $800 a month, $1,000 a month. I've been a part of pump and dump rooms. Been a part of it's like the Pantheon. Throw you to the lions. yell at you, tell you suck. Our community is very welcoming. Our Discord's very welcoming. They don't care who you are. They don't care if you're black, brown, yellow. They don't care if you're gay. They don't care if you're Republican. They don't care if you're MAGA. They don't care if you're Antifa. They take that hat off. They trade the market. They're there to make money. That's rule number one. Here to make money. Rule number two, we're adults. We can talk about that stuff as it relates to the market. So if you're looking for a community, hang out. Come back, hey, shit talking in YouTube, shit talking Twitch. Watch what people are posting. We have moderators in every one of these chats that I trust. They're great fucking traders. They make money. They post their wins and losses. They post their entries and exits before, never after. Yeah, we don't want any Canadians in there. That's the only group of people we don't take. We don't let the Canadians in. I'm just kidding. Woo! Go Red Wings. Go Wings, baby. I got something cool for you out there. You guys want something cool? I got something for free members. Hold on, I got something for you guys. Hang tight here. We have a I'm not going to say his name in public. I don't want to expose who he is. One of the very good contributors. In our group. But he helped us out last night. And this is something where, like this summer, I want to talk to you guys. We talked about Discord really quick, how fucking cool it is. So last summer, Wall Street knew that Trump was winning. Then last summer, they said, oh, Kamala's in the lead. And then they said, nope, Trump's going to win. And Wall Street was like, we're going to run this basket. So they ran this fucking basket up all summer. They knew Trump was going to win right up into the election. They knew election day that he won. And we knew what the basket was. And you'll hear people on FinTwit say shit like Wall Street's not smart. Wall Street's smart as fuck. And not only that, Wall Street knows before shit happens. And not only that, they take the fucking trade and make the money and they don't care what happens. And I'll hear people that come here from FinTwit or Wall Street Bets or StonkTwits, wherever the fuck else it is they hang out, and they'll tell me all kinds of bullshit they regurgitate because some bro with 500,000 followers on FinTwit told him so. And I'm like, that fucking guy's lying to him. Selling him some shit. So I got a gift for you today. At home, grab yourself your little, type into a little box at home, type in a snipping tool, and snip this right here. This is a Ukraine ceasefire basket. Includes the names that could potentially outperform in an event of a ceasefire and from rebuilding efforts in Ukraine. The D1 team compiled the basket based on inputs from European equity research and spec sales teams. Yeah, snap that bad boy, and then you guys want me to make it bigger? There you go. In our Discord, we have a more expanded data on this and American markets. The impact on a ceasefire. I'm not going to show you those. There's an entire basket they're running right now, US and in Europe. You are going to see a ceasefire. And if we don't, they'll tell us. I'm messing with the Canadians, now we're talking about Canada in the Discord. Blame Canada. I'm going to bring up pivots here, too, in just a moment. Here's your pivot point, intraday, 0 date, positivity. It's at 602.37. Upside targets, you see these yellow lines right here. Upside targets, we have R1 is at 607.50. That's what I've got, 607.50. Downside targets, you want to see those? 599.40. 594.26. 591.27. I'm going to pour some vodka. Hold on. I'm just kidding. We will have the presser live here on the show. We will have J Powell. Let me know if you think we're going to have a purple or a blue tie. Or a red tie if you're a bear. Feel free in the or any of the chats, feel free to express yourself and what you think is going to happen today. Remember, you're retailers. No one else is going to help you. Do you want to know what I think? I think we trade down here to this 600 or so. I think we plunge down here at some point. I think they rope us in. I think they tie us into about 602, 604ish. And then we await the earnings after the close to trade 607ish by Thursday close. I also think into the I think it's gonna come out like no rate cut, no rate hike. That's in line. We'll like dip, we'll like be tight in here. We'll go up, and then we're gonna come back down to that 600 when Jerome speaks. That interview, that presser, we're gonna come back right back down to that 600. But if you have a different opinion, make it known in any of these chats. Say whatever you want. No reason not to help each other. And I don't know everything. I get shit wrong. One of the best parts of Captain Jim James is I win and I lose. I don't make videos at nighttime. I don't tell you after the fact. I don't give you 3 or 4 different outcomes. I'm not that guy. I win, I lose. I go through losing streaks. I go through winning streaks. Trading the market. And you guys should be honest with each other, too. That way, like, it's okay to lose. It's okay to be wrong. As a trader, as an investor, you should have a plan. And you're not expected to be always right. But you are expected to have a plan, right? So if it goes wrong, you know what to do, right? How do you react to the plan going awry, right? Make a plan for a year, make a plan for half a year, a quarter, a month, a week, a day. This is what I expect to happen. If it doesn't go that way, what are you going to do? All right, I'm a bear. We're going down to the depths of hell today, Cap. Jerome's going to be a bear or a fucking hawk. What if he isn't? What are you going to do? Don't be believing people out there that tell you shit like, oh, you said we were going to the moon and we crashed. Those are fucking loser trolls. If you think it's going up and it goes down, you need to be able to react to that. It's very important to be able to adjust your opinion of things. You're never, this whole thing is not about being right. You're like, I'm an engineer, I'm always right. I work in finite shit all day long. That might have worked there, but it doesn't work in the stock market. You have to learn to know you're going to be wrong. And you got to learn to know that when you are wrong, how do you adjust to being wrong? People that tell you otherwise are trolling you. Don't allow that internet point shit in your life. Don't allow it. You'll have people out there say things to you like, they don't really say to me, but they'll say like you get like a perma bear or some shit. Or like, that's the top. I don't care if they call it the top. I care more, are they adjusting to it not being the top? That's what I really care about. You called the top, it wasn't a top. What the fuck are you doing now? I'm getting long. Sweet. What are you long in? Internet points don't mean shit. Nobody gives a fuck. You meet some hot woman out there, she doesn't care about you winning on the internet. She cares that you won in the stank market, so you can take her out, buy her a nice fucking meal. Take her to a concert or something. Take her to the library. Buy some Molly and dance. She doesn't care about some guy you know on FinTwit because you beat him that day. It's like that meme where the guy's doing the fist pump yelling at his girlfriend. They don't fucking care. They just care that you won. You made money. That's winning. That's it. That's all that's winning. Oh, shit. Here we go. Condor's got everybody trapped in the fucking market right now. Uh-oh. Who's calling me? Hold on. I got to take this. Wrong phone number. Yeah, that's it right there. That's it. That's it, Poke. That's it. Poke Juicebox just posted. That's the same guy, right? It's one. It's one of the two. One version of the two guys. That's exactly it right there. That's the guy I'm talking about. We got a little bit of a sweep over here. You see that white line on book map? See right here? Oh, right there. See it? Coming into relief, right? There it is. See it? That yellow line down there? Watch out. They're going to try to drop this bad boy. $12.49. I'm going to take a quick 10-minute break. I'll be back with you at 1 p.m., maybe 1:10 or something, but right around 1 o'clock, I'll be back with you guys. I'm going to put the Financial Juice News Squawker on when I get back. I'm going to review some more data for you, okay? Some more news related to the FOMC and some of the reports tonight. I'm also going to get you prepped for the big tech reports. We're going to draw some lines on a piece of paper for expectations on your big tech reports tonight and tomorrow. Got it? And then we'll prep you up for the FOMC at 2 p.m. We will have a news squawker talking about it. Let you know what the data is. I'm going to post a bunch of crap to you. I'm going to give you my reaction. And then at 2:30, we're going to have Jerome on the show live. And then we'll head into the after hours earnings reports. So we'll have a couple treats for you here today, especially some outlooks on ERs, expected moves, stuff like that. So if you are interested in the reports that are coming out today and tomorrow after the bell, and possibly even one, or if I can get to it, one or two. I think we have UPS. Is that today, or is that? I think UPS is tomorrow. So we'll give you some expectations on UPS, that kind of stuff. I just got to rest my voice here. I'm about to lose it. So I'll be back with you guys in about 10 minutes.
Washington Post reports that the White House rescinded the federal freeze on grants order.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
Confirmation now from a White House official as the White House rescinds the federal aid freeze.
Trump officials discuss tightening curbs on NVIDIA China sales. So just to repeat that there, Trump officials discuss tightening curbs on NVIDIA China sales. Any curbs would likely be a long way off as new team sets goals. So just noting some downside in the S&P 500 following that headline there. So Trump officials discuss tightening curbs on NVIDIA China sales. The US stocks extending their fall now. Nasdaq down 1%. So NVIDIA falling to session lows, down 6%.
Oh yeah, baby. It's almost like that news story. Before that news story broke, you see that news story break. Before that shit even hit the hot sheets. This fucking yellow line was down here, right? They were already waiting. It's almost like they knew. You guys didn't hear him talking about Trump? You guys didn't hear that? Trump officials discussed. Can you guys not hear that? Let me know in the. Did you guys hear that? But can you guys hear the news squawker talking? Did you guys miss that? Can you guys hear it? You heard it. Okay, cool. Yeah, Trump officials are right on Fed Day. Trump's sitting in a shitter. He's changing his diaper. He's got the Robinhood app open on his phone, and he's like, I'm gonna make a quick fucking $50. He's like, go out there and tell everybody that we're gonna discuss curbing chips on NVIDIA. NVIDIA just went to the depths of hell too. Because I got shorts on NVIDIA right now. Oh, fuck. Imagine that. You're just hanging out. You're fucking NVIDIA bull, just fucking around. Look at this NVIDIA blasting down right now. Oh, man. This is NVDA right here. NVDA trading 120.05. Come on, Cap. Stop talking about that shit. You gotta learn. You gotta learn, baby. I'll tell you what, it's a really good thing. It's a really good thing being or normally the politics really doesn't matter, but like Trump does matter. That motherfucker cares. That motherfucker's trading. You know he's trading this shit, guaranteed. So in this environment, I always say I have this rule where you always trade the reaction. Well, if it's up or down, doesn't matter. So if you get some kind of like Trump tweet, White House tweet, and they fucking, you ever notice they talk about specific, it's always a publicly traded company. So it's like, well, who are we picking today? So you just wait for the tweet. If it goes all the way up, you short it. If it goes all the way down, you buy it. Oh, fuck yeah, Addy. Right on. Hell yeah, Addy. Now we got some people with puts right now. They're getting paid. We got some people in the Discord and the pro chat. They just closed, made a bunch of money down here. I should have bought calls there. I don't have my shit set up right now. Hold on. Fucking day trading the goddamn day. Whoa. Dude, they're all expensive as fuck, these goddamn options are buku bucks. Let me fuck around and play today. We're just talking in the pro trader expectations on the day or on earnings. There's a little bit more down there. I don't know if we hit that or not. Oh, we hit that. We hit that target down there. We hit it. It's right there. That already popped up about 15, 20 minutes ago, though. You want a discount? You didn't think you got a chance to buy? You think you missed the chance to buy NVIDIA? Think again. I bet Wall Street Bets is having a fucking meltdown right now. They gotta be. They gotta be having a fucking melt. I'm gonna go over to Wall Street Bets and see what they're doing. Let's see what Wall Street Bets is doing right now. If they're like the Bears are shitting on all those bulls in there. Let's go see what they're saying in Wall Street Bets right now. Yeah, someone just saying, how is anybody shocked that China stole the IP on ChatGPT? We talked about that the day it dropped, right? Of course they stole it. Of course they fucking stole it.
So the EU draft document lays out a roadmap for thinning regulation across bloc.
This is called Trump trading, baby. Yeah, talking monkey, exactly. You get the Trump tweet, market goes up or down, you fucking buy or sell it. This is called the Trump tweet trade right there. Can you imagine trading futures though? Gone. It's all gone. Maintenance time. Nice little trade right there, huh? Woo. Down, boom, straight back up again. Let me go check in the market chat, see what they're saying. You guys are trading UVXY today? $100% timber. Front running volatility into today, huh? That looks what it looks like. All right, give me one more minute. I'll be right back. Just did some quick, got up, did some nice exercising. Whew. Just did some curls. Get the blood pumping. All right. All right, so what we're going to do here is we're going to take a quick look at
So according to the Wall Street Journal, Trump administration rescinds order to freeze federal aid funding. $35 counterparties take $121.842 billion at the Federal Reserve repo operation.
all right, this is what we're going to do. It's 1:16. The next 15 minutes, I'm going to try to give you an outlook today for earnings.
Do you want to say protect your trades from macro headline risk with Financial Juice Pro? Now only $99 a year for our real-time service.
Okay, so for today, after the bell, we get a bunch of earnings, but I'm gonna review really quickly. Tesla, Meta, and Microsoft. After the bell, I'm going to, or after whenever we're done with like Jerome, I'm then going to review Apple. And I think that's it for this week. Now, I did last week on Friday. This past Friday, I spent the second half of the day reviewing all of these in depth over the course of a year. I looked at a very far outlook on these stocks, okay? Now, we're going to refine it a little bit for just the reports, okay? For just like, hey, we're coming in to report like an hourly basis on these stocks, okay? So for right now, this afternoon, I'm going to try to hammer out Tesla and Meta for you, okay? On a smaller time frame. Oh, by the way, do me a solid, will you? Hold on a second here. If you're a Tesla gang or Tesla Q, or if you're a Meta gang, go tell your friends on socials. Let me ask you guys, do me a solid here today. If you are watching this show, I would appreciate it If you could like these videos and subscribe wherever you're watching, I would appreciate it. If you could tell your friends out there, hey, this guy's gonna do a review for earnings after the bell. I know some of you guys have friends out there, stuff like that. Just be like, hey, this guy's gonna review Tesla after the bell. And we'll do that right now while we have the time, okay? So if you could like the video wherever you're watching us, if you could just hit the like button, subscribe button, I'd appreciate it. It helps us to get more viewers. I don't make any money from this shit, so but I appreciate the likes and subscribes. It helps me to get traction on YouTube and Twitch and on Twitter and all the other shit. So we're gonna look at Tesla right now. No, I don't want to compare any symbols. All right. So we're going to go down here. We're going to look at our boy Tesla down here. We're going to do this like I'm going to do it really fast. And just like bear with me. We're going to do this really fast, okay? I'm going to give you my thesis here on Tesla. We're going to start with Tesla. And see what my expectations are on their earnings, okay? I gotta get some stuff going here. Pivots. Okay, we got everything. All right. Tesla. We're gonna look at the first thing we're gonna look at here is velocity. I'm gonna tell you right away what I think. Okay. Let me do one more thing in here. I gotta do that, and 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 that. We're gonna do traditional pivots. We're not gonna do Fibonacci. We're gonna do weekly expectations. Hit that. And then we're going to look at a daily basis on velocity. And this is what I want to show you. Tesla loves to trade on daily velocity on a bottom. We're not there yet. So I'm bearish on Tesla right off the gate. I'm bearish on Tesla ZR today. I like to buy Tesla when daily velo is showing higher lows on a negative. Tesla famous for longing on major daily velocity lows. It's bullish over the long term. I like the stonk. I like it. It's a nice rotation trade for 2025, but I don't like it today for their earnings. I'll be honest with you, just looking at this right now, I can tell you off the bat, I'm not bullish on their earnings. On a 30-minute basis, same deal. This looks bearish to me. I would prefer to see higher lows on daily velo. Also, hourly is quite bearish as well. I don't like that. 15-minute, half an hour, possibly get a little rip on their report and then sell the news. So I'm not too bullish here on Tesla. It's not good to see. Whoop. I don't like seeing that at all. On a monthly basis, take a look at this really quick. I'm going to be really fast here, okay? 310.14, okay? If it goes ugly, 310.14, and even possible 193.85. Negative earnings, 193.85 target. I don't see that today, right now, just to let you know, I don't see that target. And I don't see that target either, 310. I don't see that at all today. That could be down the road if it's a bad. If they give you bad ER, we will definitely trade 310 and possibly even 189, depending on how bad it is. But it's not today. On a weekly basis, this is what I'm more interested in right here. And I'm going to show you what I'm really interested in here. 329.64 and 370.01. I am bearish on Tesla earnings today. Even if they give a good report, I'm bearish. Good guidance, don't care. Bearish on Tesla. There's a gap to close down here. Okay, you ready? If market conditions turn ugly into the first of the month, you could potentially hit 329 and 310. That's the worst I see. You got a gap to close at this 320 down here, but on today's earnings, this gap is what I'm really focused on right here. 345. Two, three, 4, 5, 6.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro.
Here's S4 and S5 down here. This is 333.62, 352.08, and there's your gap right here. Your gap is right in that S4.5 right there. That's your buy zone right here. Market conditions is lower. 310, 329, but this is the target right here. Ready for the target? 343.28. Scratch that. 342.71. That's my target. Now, saying that, I did a higher time frame expectation on Tesla last week. What I do want to say to you is you're likely going to escape this coming into February and March, okay? You will escape this. Look for a low to buy to trade into March and April, and possibly the summer, July. They want more down, in my view, okay? Even if you get a squeeze up here, the way is lower. So I'll give you this. You have a little bit of velocity that helps you here into the end of the day, but your hourly looks like your half hour velocity looks good to go up. Your daily velocity looks like dog shit. So you got a lot of fucking sellers up here. You see all these fucking sellers right here? Bam, bam. Expectations. 390 to 400. Price target 367.48. Price target 342. And then an escape. Another note on this too, the indexes will capitulate later. So you'll get like the index capitulation in like February 4th, 5th, 6th, 7th, 10th. You'll see the tickers, like individual issues, will bottom before then and begin to be accumulated. So don't be watching SPY or NQ. Watch Tesla for a bottom, and then you'll see the other indexes fall as Tesla is being accumulated up. Does that make any sense to you guys? So if like Tesla should fall first, and then you'd see like SPY and Qs fall later. Tesla will be accumulated as Qs are bouncing down here. So be Johnny on the spot before we ever get to the bottom of Qs. Expectations. Bearish. Tesla, ER. Price target in the next 2 weeks, 342. Shitty to say that, but that's what I got. Make sense? You want to snip this for yourself? Whoop, right there. You could make a case for an extension lower, but I don't think we get there. You need like real risk off shit. You need like Trump like fucking starting trade wars and shit. I can't tell if that's the case or not. I don't have that crystal ball. %, 30%, 30% maybe. Leave 10% in the side. 30%, 30%, 30% if we recover. Even if they have a good ER, I see us coming back down here. I'm going to warn you that too. You get a good ER out of Tesla. If you get something out of Tesla like, oh my God, it's amazing. You'll trade 427, come back down, and then you will trade 460. But I don't see that trade right now. I don't see it. They'd have to do like pull fucking unicorns and unicorn farts out of their ass. I think it's lower. Bearish. That's unusual for me. I'm quite bearish here. So no go for me on Tesla today. Next one we're going to do is Meta. Man, my fucking throat. I got to speed this up. We're getting close. I don't know if I have enough time to do all these. Bullish on Meta. Super fucking bullish on Meta. We still have to deal with market conditions, though. This one's frustrating. That's Tuesday. It's these buyers here, right? There's Monday buyers here. So that this initiation was when? This was today, this morning. Tuesday. Somewhere down in here, right here. I'm bullish here. I'm bullish on Meta. This is early week. This is like the beginning of the week here. Oh, wait a minute. Go back to a 30-minute. Something like this. All these buyers, they're like right here. So I'm going to give them this like first target here, 686.15. Take the money and run. The bullshit garbage we have this week, but it's still strong. Like they should get like a good report, good guidance. All these guys are still long down here. They're long into March already. This is all like, and this right here, like bam, straight back up again. You see that right there, that down move? Like, fuck you. Nope, it's up. This is a big, like now we got this whole, like we do have a big gap to close down here. Like worst case scenario, if Trump is horrible, 635 on a low, but I don't think so. I don't think it's going to get that deep. I think you got your chance right here. I think maybe that's your second plunge team. Plunge right there. You're off and running like boom, boom, boom. And there can be an argument made that it's lower, that it's over here. Now, this would have to be like Trump really fucks around. Your low target 617, or they miss, or the guidance sucks. I don't see it though. I'm pretty fucking bulled up here in Meta, and not only that, I think Meta might buy. I still think Meta might be buying TikTok. I'm still on that trade that Meta buys TikTok. Here's your reversal here, right? This is your inverse head and shoulders. It's going to be fake, of course. Take it down and back up. This is the 27th. I'm pretty bulled up on Meta. They're like Velo on daily and weekly is just getting started. So upside targets. Another thing here too is this: you have a natural rejection point at 700. Everybody's going to be looking for like 700. It's like you hit like, or you're like, I'm betting traders are like, we're going to trade 700 or 706 and bounce and start going higher. That's what I think all traders are expecting. What I really think happens is like every time they come in like a big round number, like 700, there's huge supply. And they always take you out right before you get there, like about 12 points, 12 or 12 and a half points. So like 688. It's like right here. It's like a false breakout. And then you get the daily velocity that comes up, and that actually pushes you up and over. So this would be like this. See that daily velo right there? It's going to take some time to help you get out there. So I'd really like to see this like daily velocity come up like this. This is that 10th, right? 5th. Bullish, right? So fail the 700. 698 right there. And then finally start breaking out. So get up. This is going to take some work. Like you're going to get up here, a false breakout. Finally get over the 700, back down again. When you get above here, there's going to be a major pullback. You're going to come down to this 700 finally, and you're going to go whoop, right back down there. And then back up there into March. You're going to really fight this, like slam into 7, finally come back. There's your daily trigger. Big thing down here. This bad boy right there. Slam. You're going to destroy all these sellers up here. Come back down to that daily trigger. And this daily is fucking bullish. Weekly's bullish. This is your jump point right now. All of this is predicated upon Meta not coming out in their ER today and saying something fucked up. This week he had the stupid fucking presser going. This week he had the stupid fucking presser saying we're hard at work right now. You got Baba coming out saying they got new LLMs. They need to pull. They better have hired a PR team because this is your jump point. And this right here is saying the same thing. So this is your jump point. You should be buying like 650, 665, 660 to make a breakout above, to be trading into the end of the year way higher. So for right now, bullish. On Meta, on their report. Keep buying down here. And use this as like a major buy down here. Now these buys down here should be like April, July, late July, and then late September. So if you're ever looking to get back down here, it's somewhere in here. We could have a bloodbath lower on Meta at some point on their weekly trigger down here. But I think this weekly will get up to these levels here by the time we have one. So I'm pretty fucking bullish here on Meta. I like the stonk. I like its velocity. And here's the best part about this one, too. I want to warn you of something else. Its velocity is so good that even if you have a bloodbath, it's going to go right back up again, just like this one. Like, so if you're like long Meta stock, You like wake up one morning and it's fucking blooding. Close your laptop for a week. It'll be right back up again. Straight back up again. Its velocity is fucking monstrous right now. So there's some momentum underneath this stock that's fucking wild. And this is all predicated too upon no bullshit from Meta. No bullshit today. Like when they report, give their guidance, fucking Zuckerberg better be showing his fucking sliver tongue and his fucking flippity eyes and shit, his little like beady fucking lizard shit that he's got. Wall Street believes in this stock. I don't know what it is. I'm trying. I think it's fucking. I think they're gonna buy. They got something that nobody knows. I don't know what it is. Very bullish on this stock. Have been. I don't know what the fuck it is. I don't know what that announcement's gonna be. I know they've promised some shit, but there's something there with. I don't know if it was the talk that he gave a couple weeks ago. Shitting on new products and stuff on Apple and what they're developing versus what they're developing. There's something that we don't know. I don't know what it is. Microsoft. I like this stock. You already know this. Of every tech report, I think it's number 1 or 2 for me for big tech. I fucking love this stock. Look at this fucking thing. They sent this thing down and it came right back. Last Friday, I told you they would trade us down into their ER, and they did, didn't they? Gave you guys last week on Friday, what did I say to you? They're fucking trade these things down here, and they're going to recover, and they did. This one in particular, like for strength, like I'm hoard out on Meta in terms of like price action, but like quality stonks. This is a quality stonk. What else can you see here? Just looking at it, something huge, right? Look at that bad boy. Woof. Daily's turning up. Successfully back tested its weekly again. Look at this. Bam, fuck you up. Bam, fuck you up. Bam, fuck you up. Weekly is monster right now on Microsoft. Microsoft is another one that I love. I really do. It's good. You'll see bears out there telling you that was the top. This is the, this is a double top, and this is distribution, bro, in a higher frame. Telling you what, let's look at the velocity right now and see if they're telling the truth or lying. Look at that fucking island right there. That's a diamond formation. It's going to go down distribution. Yeah. This fucking thing is in the final phases. This is huge, Momo. Lots of room left. Lots of room left here. There is a little bit of like indecision that I don't like, but I'm looking for this big move here. See this big weekly? I'm looking for that weekly to just start climbing. It's daily is not that good. It's okay. It's coming up from a bottom, so I'm bullish on the ER too. So I'm bullish on Microsoft's ER. I'm bullish on Meta's ER. I'm bearish on Tesla ER. I really like this velo down here turning up. They love to move on that. And I really want to see this into end of year in Microsoft. I think Microsoft has a fucking epic banner next year or two. And they're gonna max out this monthly. You're gonna see this quarterly max out. So I'm kind of bullish here I'm pretty bullish here. As a matter of fact, if you own Microsoft, I would be fucking diamond handing any downside moves. Any big dude down moves, buy it, hold it until at least the end of this year, maybe even longer, until we max all this shit out. You used to have some kind of move like this on Microsoft, it's going to be baller. So you get this big weekly trade on Microsoft. That's what they do. Boom, boom, right? Up new level, boom, up new level. We're doing that right now. We're concentrating now right here on consolidative move to go this big fucking move into the end of the year next year. Blow off top. It's going to be epic. Let's look closely at this one. Any chance to buy 385, buy it. Great fucking stonk. I love it. And I like it right here. I don't even like it down here. I like it right here. Look at this fucking fair value, baby. Fucking 420. I love this stonk too. I really do. I really like it.
'Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
3, 4. 1, 2, 3, 4. One. I like their ER today. Price targets, Microsoft, 452.82. You're going to get some market turbulence, and you'll have an escape to go much, much, much higher. After in like March, April, I already gave you an outlook on that, but you're contending with 460 basically, and like 464 up there, 466 in like March, April. You got a beautiful dip buy down here. You get like a nice print today. You come back in. Start of February, volume comes in. Real trade lower. Real trade for March, April down here at 437. Bullish Microsoft. Okay, let's recap this stuff. So, and I'll do the other reports for like UPS and Apple and all that shit for Friday at the end of the day. We're getting closer. It's 1:56. We're almost ready for the report. Bullish Microsoft on their ER. I think they maybe even print better than, or maybe they print. I don't know what. However, I drew that fucking shit. Bullish on Meta. Bullish on Microsoft. Sell the news. A little bit more volatility for the rest of the week or into the beginning of the month. And then Tesla, I'm bearish. I shouldn't be. I want you to know, if you're Tesla gang, that I'm bullish on Tesla for major outperform end of the year. I'm not like a hater on Elon right now in terms of market. That's a whole separate thing. That's my Main Street hat. But as a trader, I don't fucking mix that shit. So whatever you think I dislike Elon, I promise you, I give you undivided attention as to like, or like if it's bullish, I tell you it's bullish. So I don't like mix those opinions. Two different things. So Tesla, bearish right now. In the interim. Sorry to say that, but I am. Watch me be wrong. Watch like Tesla, Moon, fucking Microsoft, and fucking Meta get sold down to the depths of hell. Counter trade me. I do get about, I want to say I get about 70% of these right. So I may not be right on one or two of them, but generally speaking, I did pretty fair good on these things. Now, the only thing I can't account for is shit that I don't know about. Like some stupid shit comes out that no one knows about or they lied about or some shit. I can't do anything about that. But generally speaking, and if you get like an opposite reaction, check back in a week or two. Normally they'll come if I say, hey, that's going up, and they blood it, it'll come right back in like a week. Do you get what I'm saying here? So if I'm bearish on a stock, no matter what the outcome on a data thing, it normally will like continue to be bearish and hit those lower targets later. So even if I'm wrong that day, I'll be right in like a day or two. So this isn't you and I. This is banks. You can tell like fucking banks, are they long or are they short? They're short right now on Tesla. Okay. We're going to switch over to one quick second here. We're going to switch over to our our rate decision graphics. I hope it works. Here is SPY right here. Pay close attention to the squawker, the news squawker. Over here in your top left-hand screener, I'm going to do Dixie and rates. I'll do 3. This is rates. That's VIX 9-day. Ten-year rising right now. SPY blooding. Dixie on the rise. Weakness right now in SPY. The U.S. interest rate decision, actual 4.5%. Forecast 4.5%. Previous 4.5%. Fed statement does not include language that inflation has made progress towards 2% objective, as it had in December statement. That's a hawkish Fed. Heads up. Fed statement does not include language that inflation had made progress towards 2% objective, as it had in December statement.
Main changes noting here, statement does not include language that inflation's made progress towards the objective, as it did in the December statement, and also notes that the unemployment rate has stabilized at a low level. The labor market conditions remain solid. Previously, it had said the conditions have eased.
A little bit more hawkish tone from the Fed today.
As again in the markets,
Unemployment, though, good.
a little bit of strength in the dollar as well. Gold extending losses here too.
Fed saying unemployment rate is stabilized at a low level. Labor market conditions remain solid, replacing reference in previous statement to conditions have eased. So a little bit more neutral on unemployment in the statement here. Fed also saying economic activity has continued to expand at a solid pace. That's positive. Fed is attentive to the risks to both sides of the dual mandate. That's neutral positive. Vote in favor of policy was unanimous. Economic activity has continued to expand at a solid pace. Balance sheet runoff to continue at previous pace. This is all in line with a neutral pause stance, except for inflation. Hawkish on inflation.
Traders price in less Fed easing this year after the FOMC statement.
Is the governing
Traders expect the Fed to wait until June to cut rates based on short-term interest rate futures. US 2-year Treasury yields rise to 4.249%. The 2 to 10-year yield curve little changed at around 33 basis points.
Traders price in less Fed easing this year after FOMC statement. Traders expect Fed to wait until June to cut rates based on short-term interest rates. Balance sheet runoff to continue at previous pace. The Fed is upbeat, though, on the economic activity has continued to expand at a solid pace. That's positive. That means that we ran hot a little bit. So mixed bag. Basically, pausing tone here. 10-year yield rising. VIX 9-day up a little bit, but not crazy just yet. SPX trading down into local support at 6025. Be very careful here. We will blood down to 6,000. This is support in the market, by the way. IWM very weak here. We talked about this, that IWM was the index to short. It looks like dog shit right now. Q's weak right now. Dow Jones weak right now. VIX 9-day looking bullish. Dixie, not too much right now. Not too much I can see on Dix. I mean, it's up right now on a 1-minute basis, but be very careful if you're a bull here. We're gonna drop it like it's hot. We're gonna drop it. Show it to you like this. Yeah, this looks like a more like I'm assuming here we're going to have some conversation about the reporters. They're going to be talking about like Trump and policy. You can see it right now. I'll read this stuff to you again. The unemployment rate has stabilized at a low level. Labor market conditions remain solid, replacing a reference in previous statement to conditions having eased. So, like, I think someone just said it in one of the chats on Twitch. He already took his victory lap, right? So the victory lapping on unemployment is done. Now to the positive. Economic activity has continued to expand at a solid pace. The Fed is attentive to risks to both sides of its dual mandate. The vote was in favor of the policy was unanimous. That's good to see this time. Economic activity has continued to expand at a solid pace. That's good. The balance sheet runoff to continue at previous pace. That's good too. It means that they feel as though the economy is good. But traders are pricing in less Fed easing this year after the statement. Gambling, of course. Traders expect Fed to wait until June to cut rates based on short-term interest rate futures. 10-year climbing to 4.581%. If the rates start to climb over 4.6, the yield at least, excuse me. If the yield climbs over 4.6, start getting worried here. Dixie also on the rise. Still haven't broken over 4.6 though, so no like doom and gloom just yet. Higher low currently on SPY. Dixie's still cranking. 10-year still cranking. Now at 4.581. If we lose this level, we're going to trade down and trade 596.54. I didn't think about that. Sneaky CDN just said Trump's not going to be happy about this. Be very careful of Trump tweets. I haven't seen anything just yet. But be careful of an amplification of Trump tweets on this decision. I'm going to read you another take here from UBS. The statement changes read less dovish to even slightly hawkish in tone. This was my expectation this morning too, right? So less dovish and less, like one side less dovish, one side less hawkish. It's a more neutral statement. UBS going on to say the statement changes read less dovish to even slightly hawkish in tone. Gone are the fears of September, and indeed by comparison to December, the inflation fear has risen a little by the removal of the line that inflation has made progress, but then leaving in the remains somewhat elevated. That was from UBS. Fed fund futures taking out cuts. What else I got here? FOMC policy unchanged. Statement little change to 2. A little bit change. I'm reading a bunch of stuff here for you guys. FOMC policy statement little changed. The Federal Reserve held rates at 4.25 to 4.5 range, as was widely expected. The language in the accompany statement was not significantly changed. There was an upgrade in the characterization of the labor market to solid. I'm going to post this in the Discord right now. Open the wrong chat here. Go back to the market chat. Post this for you. If you want to read any of the changes, that I'm showing you the changes in policy. From the last statement and the current statement. Yeah, I'm watching yields closely here. If we break over 4.6, it should be a bloodbath. $2:13, 17 minutes until we get the presser. I've got it keyed up down here, ready to rock for you. Man, I want to buy calls really bad here. And I want that dip, though. Be patient, Cappy. Be patient, be patient. I got to wait for one of these fucking... I want to wait for one of these reporters to get done with their shit show in Trump. I got Trump tweets up in front and center here. VIX 9-day starting to climb right now. Watch out for the drop.
Let's keep in mind that live at the moment, Trump is currently signing the Laken-Riley Act. We'll see if he does say anything relating to the Fed today.
He's signing an act right now. We gotta wait for him to run into the bathroom. He's probably still in those puts. It's like he's gonna sign the act, watch the presser, then he'll hit the fucking Twitter, fucking slam it, fucking then we'll buy the dip. Did you see him laughing, Simon? He knows what's up. I think everybody knows. We're waiting on Trump to finish up a fucking signing a thing so we can get his commentary. Market's waiting. We'll have the squawker on with Jerome, so if the squawker starts talking, we'll turn Jerome down. He might go off the fucking handlebars. If he posts tweets, I will read them to you as Jerome's talking.
'Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Use Pro for a year's worth of our service for the price of 1 month and save 92%.
Trump says there was a short-term pause of funding.
Nine minutes left.
Trump says, I paused a $1.7 billion in payments to foreign organizations.
Trump is talking about the $50 million that was going to Gaza for condoms. Are you serious? Oh, God. Trump, there was a short-term pause of funding. I paused $1.7 billion in payments to foreign organizations. Should I look for Trump live right now, maybe, and play it for the next five minutes? Let me see if I can stop. Fucking hate Edge. Edge blows. God damn it, man. Edge is, oh God, dude. Like, Edge is like one of the, Edge is like, ugh. Edge, oh God, it sucks so bad. Can't stand Edge. See if we can find Trump live right now chatting. There we go. We'll keep his audio on.
Lakin was a brilliant and beautiful 22-year-old nursing student from Georgia, the best in her class. She was always the best. They would say, Lakin, how do you do this? And what do you do? They were always asking her questions. She was respected by everybody, even her teachers. They respected her so much. From the time she was in first grade, Lakin knew she wanted to spend her time caring for others. That's what she did. To her friends and classmates, she was a light of warmth and kindness in every single room. To her parents and family, she was everything in the world. They've had a miserable period of time. Just after 9 a.m. last February 22nd, Lakin went out for a jog on the campus of the University of Georgia, but she was just never returned. She never came back, did she, huh? Parents are here, sister, all of her relatives. While on her run, Lakin was attacked, viciously assaulted, beaten, brutalized, and murdered by an illegal alien gang member.
Oh, God.
Set loose into our country by the last administration.
I don't know if I can do this.
To be joined today by Lakin's parents, Allison and John, and her sister, Lauren. Thank you very much.
I thought they were talking about Abraham Lincoln. I kid you not. I shit you not. I thought they were talking about Abraham Lincoln.
We were together right after that happened, and it's a tremendous tribute to your daughter, what's taking place today. That's all I can say, but it's so sad we have to be doing it at all.
God, options are fucking still expensive as fuck.
To Lakin's family, we will keep Lakin's memory.
I can't buy calls here.
Our hearts forever, everyone's hearts.
At 2:30 p.m.
With today's
Eastern Time, we get the FOMC press
her name will
conference
also
with
live
Fed's
forever
Powell.
in the laws of our country, and this is a very important law. This is something that has brought Democrats and Republicans together. That's not easy to do. Lakin did it. Lakin did it.
Wait a minute, Lakin or Lincoln? Was he talking about Lincoln or Lakin? Who's the fuck's he talking about right now?
The vicious criminal who murdered Precious
Okay, the vicious criminal.
member of the barbaric Venezuelan
He's like mixing up the name right now.
Nicaragua. He trespassed across our southern border in 2022.
He's like Lincoln. I mean Lincoln.
By Border Patrol, but under the cruel policies of the last administration, instead of being deported as he should have been, he was released into the United States, as were millions of other people, many of them very dangerous people. And you see what we're doing? We're getting them the hell out of here. He was soon arrested again in New York City on charges of endangering a child, but because of New York City's deadly sanctuary policies, as we have in California and many other places, which we're ending, we're going to end them.
Come on, Jerome, 6 minutes. Come on, Jerome.
The Biden administration then provided this illegal alien criminal with a free, taxpayer-funded flight from New York to Georgia, where he was arrested yet again, constantly, this time for stealing from a Walmart along with his gang member brother, who was a bad one. Only after being released a third time by the U.S. law enforcement, did this cold-blooded criminal go out in that fateful morning hunting for women on whom to prey. That's what he did. He hunted. It was like a hunter. And we're going to show him who the hunter is. This horrific atrocity.
He's shitting on the police right now.
As president, I'm fighting every single day to ensure that such a tragedy never happens again. We don't want this to happen.
Fucking cops out there like, what the fuck is he saying right now?
Under the law, thank you. Under the law I'm signing today, the Department of Homeland Security will be required to detain all illegal aliens who have been arrested for theft, burglary, larceny, shoplifting, assaulting a police officer, murder, or any crime that results in death or serious injury. In addition, for the
We do that already, don't we?
give state governments the ability to sue the federal government for immediate injunctive relief if any future administration ever again refuses to enforce the immigration laws of the United States, like happened for 4 long years.
10 years parked right now. Just a heads up. We got 2 minutes left until Jerome comes out. 10 years like fucking parked at 4.585%. VIX is parked ready to rock to the upside. Dixie is ready to rock to the upside. I want to warn you here as we come into this presser here. The market right now is poised to bloodbath to the downside.
But they can't. That's why I'm here instead of somebody else, actually. It's the biggest reason. I believe it's the single biggest reason. Inflation was horrible.
Oh.
Many things were horrible during that administration. When you look at what took place in Afghanistan, the way they got out, not that they got out, but the way so many things were horrible. But to me, this was the worst of all. It's a landmark law that we're doing today. It's going to save countless innocent American lives.
He talked inflation for a minute there, for a second.
Republican, every Senate Republican, as well as the 12
So we're shortly
Senate
expecting the
Democrats
start of the
and
FOMC
48
press
House
conference with
Democrats who
Chair
voted to
Powell.
pass
To
this
just go over the order of
vitally
business here,
important
Powell
bill,
does
and many
normally
of
at this
them are with
point
us
repeat
today.
the rate
I really
statement,
do
which is
appreciate
already
it.
available on the
I
feed,
very much
before taking
especially
questions
appreciate
from
the
journalists at the
bipartisan
event.
Support the Democrats.
Okay, so here's the deal. Jerome's about to come out. If Trump says anything that's market relative, I will repeat it back to you, okay? I've got the text in the background. If he says anything that's relevant, all this other nonsense shit has nothing to do with the market. He brought up inflation for just a moment. If he says anything that matters to the market, I will repeat it to you, okay? And right now, in the next few moments, you're going to see... Here we go. Here we go. They're going to take this music that's playing in the background. I'm going to get hammered for this thing. Custom playback speed. We're going to speed this bad boy up. There we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
And Fed's Chair
The
Powell is
economy
now
strong,
approaching the podium.
is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2%
Powell says the
longer-run
economy
goal,
is strong
though it
overall.
remains somewhat elevated.
Voice news
In support of
disconnected.
our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. For 2024 as a whole, GDP looks to have risen above 2%, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have slowed in the fourth quarter, but was strong for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid. Payroll job gains averaged 170,000 per month over the past 3 months. Following earlier increases, the unemployment rate has stabilized since the middle of last year, and at 4.1% in December remains low. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.6% over the 12 months ending in December, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. Over the course of our 3 previous meetings, we lowered our policy rate by a full percentage point from its peak. That recalibration of our policy stance was appropriate in light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. As we previously announced, our 5-year review of our monetary policy framework is taking place this year. At this meeting, the committee began its discussions by reviewing the context and outcomes of our previous review that concluded in 2020, as well as the experiences of other central banks in conducting reviews. Our review will again include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. I would note that the committee's 2% longer-run inflation goal will be retained and will not be a focus of the review. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-run inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country.
Dixie rising right now, rates rising, VIX rising.
We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Watch out, here's where the danger comes.
Mr. Chairman, Steve Leisman from CNBC. Mr. Chairman, at a event in Davos, or to Davos anyway, the president said he'll demand that interest rates drop immediately. So I guess I have a three-part question. Has the president done this to you? Has he made that demand? Secondly, what is your response to that? And third, what effect, if anything, if any, does a president making these kind of remarks have on policy? Thank you.
Three questions. I'm seeing it really as one question, though. So I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work, and that's how we best serve the public.
Can you just comment on whether he's physically communicated his demand to you?
I've had no contact.
Ooh.
The Wall Street Journal. Chair Powell, you and several of your colleagues said around the time of the last meeting that your policy stance was meaningfully restrictive. Given economic and financial market developments since then, how has your confidence changed in an assessment that says interest rates are meaningfully restrictive?
I don't think that my assessment really has changed. I mean, a couple of things have happened. We've gotten more strong data, but we've also seen rates move up at the long end, which could represent a tightening in financial conditions. I think if we look back over the past year or so, we can see that policy is restrictive. If you look at the effect of high rates on interest-sensitive spending, for example, in housing, and if you look at the achievement of our goal variables, we're seeing the economy move toward 2% inflation and has moved largely to maximum employment. So we really look at movement toward the goal variables to make that assessment. Now, policy is meaningfully less restrictive than it was before we began to cut. It's 100 basis points less restrictive, and for that reason, we're going to be focusing on seeing real progress on inflation, or alternatively some weakness in the labor market before we consider making adjustments.
If I could follow up, does the economy here warrant meaningfully restrictive interest rates? And would you judge interest rates to still be meaningfully restrictive if you were to lower them by another quarter point?
Oh.
So I think our policy stance is very well calibrated, as I mentioned, to balance the achievement of our two goals. We want policy to be restrictive enough to continue to foster further progress toward a 2% inflation goal. At the same time, we don't need to see further weakening in the labor market to achieve that goal, and that's kind of what we've been getting. The labor market has really been broadly stable. The unemployment rate has been broadly stable now for 6 months. Conditions seem to be broadly in balance, and I'd say you look at the last couple of inflation readings and you see we don't overreact to two good readings or two bad readings, but nonetheless the last couple of readings have suggested more positive readings. So I think policy is well positioned.
Colby from the New York Times. Colby Smith with the New York Times. Chair Powell, how should we interpret the removal of the line from the statement that inflation has made progress towards the 2% goal? Is that no longer the case?
No. So let me look. If you just look at the first paragraph, we did a little bit of language cleanup there. We took out a reference to since earlier in the year as it related to the labor market. And we just chose to shorten that sentence. Again, I mean, if you look at the sort of intermeeting data, it was good, and there was another inflation reading, I guess, just before the December meeting. So we've got two good readings in a row that are consistent with 2% inflation. Again, we're not going to overinterpret two good or two bad readings, but this was not meant to send a signal. Other than this, you can take away from all of this that we remain committed to achieving our 2% inflation goal sustainably.
And just to follow up, we've seen inflation expectations across a number of measures rise sharply, which has in part been linked to tariff concerns. But there's also been this encouraging data that you mentioned.
Oh, fuck yeah, go Spoos, baby!
So how would you characterize concerns about...
All right, I'm getting, no. 172, 182, what the fuck you doing?
...the Trump administration?
Well, I'd say you see expectations moving up a little bit at the short end, but not at the longer end, where it really matters. And those could be related to what you mentioned, some of the new policies. I think where the
Super Dove
very much in the mode of waiting to see what policies are enacted. We don't know what will happen with tariffs, with immigration, fiscal policy and with regulatory policy. We're only just beginning to see, and actually are not really beginning to see much. And I think we need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. So we're going to be watching carefully, and as we always do, this is no different than any other set of policy changes at the beginning of an administration. We'll patiently watch and understand, and you know, kind of not be in a hurry to get to a place of understanding what our policy response should be until we see how it plays out.
Michael McKee.
Michael McKee from Bloomberg Television and Radio. You and your colleagues normally condition future policy moves with the phrase, if the economy develops as we anticipate. Is it fair to say that since there's a lot unknown about what this administration's fiscal policies are actually going
Dixie getting hammered.
have a medium to long-term economic forecast that you can have confidence in? Or if that's
Sorry, I'm in the Pro Trader right now. I'm not in the market chat. I'm in the Pro Trader chat.
in the economy, how you see it developing?
Well, at all times, forecasts are conditional at a minimum on just a set of
See if there's another one down here.
and they're highly uncertain in both directions. We know that economic forecasting is really difficult beyond just a month or two out. So in the current situation, there's probably some elevated uncertainty because of you know, significant policy shifts in those four areas that I mentioned: tariffs, immigration, fiscal policy, and regulatory policy. So there's probably some additional uncertainty, but that should be passing. We should go through that, and then we'll be back to the regular amount of uncertainty. So, you know, what forecasters are doing, not just us, but everybody's doing, is they've got sort of just a set of assumptions about what might happen, but they're really kind of in the nature of a placeholder, and meaning, you know, plausible could be, but honestly, you wouldn't stand behind it because you just don't know, and so you're just on hold, waiting to see what comes down. You know, it's a very large economy, and policy is affected at the margin, but we're going to wait and see.
If I can follow up, the idea that you feel the economy, that policy is restrictive, suggests that the Fed in general wants to continue to lower interest rates. So when you look at the data that you are dependent on, are you looking for data that tell you that you can cut, or data that will tell you you should hold?
You know, we're looking. It's more the way it works is we are looking at the data to guide us in what we should do, and you know, that's what we do. And right now, we feel like we're in a very good place. Policy is well positioned. The economy's in quite a good place, actually, as well. And what we do expect is to see further progress on inflation, and you know, as I mentioned, as we see that, or if we were to see weakening in the labor market, that could foster, we could then be in a position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy, and so we feel like we don't need to be in a hurry to make any adjustments.
Howard.
Howard Schneider with Reuters. Thank you very much. In 2021 at a central bank conference, you said, quote, throughout my career in both public and private sectors, I've seen that the best and most successful organizations are often the ones that have a strong and persistent commitment to diversity and inclusion. These organizations consistently attract the best talent by investing in and retaining a world-class workforce. First question is, do you still believe that? And if so, how do you intend to put that belief into practice while remaining consistent with the recent executive order prohibiting diversity and inclusion efforts?
So let me say yes in answer to your first question, but to the second question, I want to say this. We are, like others, we're reviewing the orders and the associated details as they're made available, and as has been our practice over many administrations, we are working to align our policies with the executive orders as appropriate and consistent with applicable law. And I want to add that I'm not going to have anything more specific for you today on this whole set of issues.
Well, if I could just follow up quickly on that, I'm wondering how you're getting that to be consistent with the Dodd-Frank law's stipulations about maintaining an Office of Minority and Women's Inclusion.
So I did mention consistent with applicable law, right?
Which is governing.
Elizabeth. Thanks so much. Elizabeth Schulze with ABC News. Just to follow up on Steve's question, what reassurance can you give the American public that the Fed will continue to operate independent of politics under this administration?
You know, as I've said countless times over the years, this is who we are. This is what we do. We study the data. We analyze how it will affect the outlook and the balance of risks, and we use our tools to try to, given our best understanding, our best thinking, try to achieve our goals. That's what we do. That's always what we do. Don't look for us to do anything else. And that's, you know, lots of research shows that's the best way for a central bank to operate. That'll give us the best possible chance to achieve these goals for the benefit of the American people. That's always what we're going to do, and people should have confidence in that, as I said a few minutes ago.
You've said that the Fed is in wait-and-see mode based on the policies that come out of this administration. Has the Fed started to model what policies like mass deportations, changes in immigration policy specifically, would look like for the workforce and for inflation?
So one of the things our staff does is they look at a range of possible outcomes, and they tend to go from really good to really bad, and you know, it's one of the best things that they do. And in each teal book, you can look at the 5-year-old teal books and see their alternative simulations. So that's what they do. There'll be a baseline, and then they'll show 6 or 7 alternative scenarios, including really good ones and not so good ones. And what those do is they spark, you know, the policymakers to sort of think and understand about the you know, the uncertainties that surround this. So yes, the staff does that, and we're all well aware that that the range of possibilities is always broad, and not just now, but always. And you have to. It's hard to be open to just how broad the possibilities are for an economy. You know, no one saw the pandemic coming, and it was, you know, it changed everything. So things happen, and but yes, we do that. But it's.
You said do.
To do that, to make assessments about what might happen and begin to think about what you might do in that case, but you don't act until you see more than we see now.
Katerina Saraiva, Bloomberg News. You know, last month you talked about a future rate cut as being pretty, you know, significantly predicated on more progress in inflation. With the characterization of the labor market in the statement today, would you say that that's even more so the case now?
I'd say it's the same. You know, we want to see, you know, further progress on inflation. And, you know, the story's there. We're just going to have to see the data. At the end of the day, it comes down to 12-month inflation, because that takes out the seasonality issues that may exist. And, you know, we're just going to need to see that. We think we see the pathway for that to happen. One example, a key example, is that you now do see owner's equivalent rent and you know, housing services, the way it's calculated for PCE. You see that coming down pretty steadily now, and that's the place where most of the remaining gap is. In addition, a big part of the overrun, as you will know, was from non-market services, which don't tend to send much signal. So you can look through all that and think, okay, then we seem to be set up for further progress. But being seemed to set up for it is one thing, having it is another. So we're going to want to see further progress on inflation. Remember, we're not, you know, we're under 2%, but our goal is 2%, and we do mean to get back sustainably to 2%.
And in terms of the labor market, I mean, how is that broadly? You know, you said a broad set of indicators show that it's in pretty solid place. Was there broad agreement on that? There's been a few underlying indicators that are showing perhaps some weakness, a low hiring rate, you know, workers reporting that it's increasingly difficult to find a job. Is that of concern to the committee?
So you're right. I mean, we look at, of course, a very broad range. So it starts with unemployment, with the unemployment rate, employment, participation, wages, job quits.
There's a 4-trigger bull cluster on the market right now. Just heads up out there.
To unemployed. We look at all those things, and you put your finger though on it's a low hiring environment. So if you have a job, it's all
Velo is looking good.
if you have to find a job, the job finding rate, the hiring rates have come down, and that's more typical of a. Let's say that the unemployment, that the labor market is at a sustainable level. It's not overheated anymore. We don't think we need it to cool off anymore. We do watch it extremely carefully. It's one of our 2 goal variables. But yeah, I'd say we watch those things quite carefully. But nonetheless, overall, look at the aggregate data in the labor market. It does seem to, the labor market does seem to be pretty stable and broadly in balance when you've got an unemployment rate that has been pretty stable now for a full half a year.
Edward.
Thank you, Mr. Chairman. Edward Lawrence with Fox Business. On employment, you said there's a broad range of possibilities, but last September you said, quote, "We understand that there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise." Now that the flow of the border has slowed and we're seeing deportations, how do you expect the unemployment rate to react?
So what's happening is that the flows across the border have decreased very significantly, and there's every reason to expect that to continue. And so, but job creation has come down a bit too. So, if those 2 things come down together, that sort of can be a reason for the unemployment rate to stabilize. In other words, the break-even rate, as population growth slows, the break-even rate that you need in new jobs to make make jobs for workers declines as well. So that seems to be something about what's happening. You do see a very flat unemployment rate.
We never hit 607.50. Yesterday we didn't hit it. We still haven't tagged that upper move.
Tax money is not used here, but Elon Musk alleges that the Fed is, quote, absurdly overstaffed. We've seen the executive branch push to reduce the federal workforce. I just want to get your reaction.
We run a very careful budget process. We're fully aware that we owe that to the public, and we believe we do that. I've got no further comment than that. Thanks.
Chris Rugaber at Associated Press.
They won't let him go, will they? They just keep fucking hammering him on this fucking policy shit. Elon Musk now being asked questions about Elon.
Would lowering them have a dramatic effect?
Chris, I'm not going to react or discuss anything that any elected politician might say. So I'll give you a mulligan.
Okay, thank you. Well, nearly 2 weeks ago, the Fed said it was withdrawing from the network for greening the financial system, even as we have significant wildfires in Los Angeles doing billions of dollars in damage. And of course, the NGFS, as you know, is a group to talk about how the financial system could address climate change. Many commentators did see the timing as political. Why did you leave that organization? Can you explain that decision?
Sure, I'd be glad to. So we considered this, really at length, and we did decide to withdraw from the NGFS. And really the reason is that the work that the NGFS does has broadened very significantly. Think about nature-related risks and biodiversity and things like that. In addition, the work of the NGFS is in significant part intended to, and this is a quote, mobilize mainstream finance to support the transition toward a sustainable economy. So we joined to get the benefit of understanding what other central banks were doing and seeing research and things like that. I think this is just way beyond any plausible mandate that you could attribute to the Fed. And so we have a quite narrow role, as I've said many times, and I think that the activities of the NGFS are not a good fit for the Fed, given our current mandate and authority. So, and I just think it was time to acknowledge that, this process dates back, thinking about it dates back a couple of years. I made the decision to bring this to the board, some months ago. The process just took time to get here, and this is when we got it and voted on it. So, and I'm aware of how it can look, but it was really not driven by politics. It was driven by kind of the disconnect between the work of the NGFS and our.
Vic's getting shanked right now. 10-year getting shanked. Dixie getting shanked, or Dixie popping up just a little bit. Dixie's on its own island. And, dealers up here, if you watch this screen right here, dealers are basically like, how about fuck you, we trade it sideways, and then dump your ass into the bell and then back up again after the bell.
2%.
Dealers want this grind so bad in here. Because they got if we get good reports, they got to fucking print all that up there, right?
Somewhat above that, as you know, and we
So we're like straight murder bot right now.
that suggest that we're making further progress on inflation. That's what we want to see, and consumers will pick that up, of course, in the things that they buy at the grocery store or at the store.
The other thing I wanted to ask was just how far away you think you are from neutral.
Yeah, you can't know with any precision, of course. As I like to say, that you know the neutral rate by its works. So I think at 4.3%, we're above pretty much everyone on the committee's estimates of the longer run neutral. I think our eyes are telling us that our policy is having the effects on the economy. That's really the question we ask. You can consult models, empirical models, theoretical models. You really have to just look out the window and see how your policy rate is affecting the economy. And I think we see that it's having meaningful effects in bringing inflation under control. It has helped bring the labor market into balance as well. So that's what we think. I would say we're meaningfully above it. I have no illusion that anyone knows precisely how much that is. But not knowing that and having cut 100 basis points means that it's appropriate that we not be in a hurry to make further adjustments.
Victoria. Victoria Guido with Politico. So as a general matter, when it comes to executive orders and OMB memos, do those always apply to the Fed?
Watch out for a squeeze here.
Or do you just often voluntarily comply? What is the legality there?
So it's been our practice, as I mentioned, to work to align our policies to those that are mentioned in the executive orders, and I'm just going to leave it at that. As I mentioned, I'm not going to go any deeper than that or get into any deeper into this set of issues today.
Claire.
Claire Jones from the Financial Times. Two questions, if I may, on tariffs. Well, first of all, we've seen global trade wars before.
1, 2, 3. Wait a minute. We got one. Let's watch this. We got a pump. 1.
In a very different place on both inflation and growth.
1, 2, 3, 4, 5.
That we got then, which I know is.
I'm going to leave this on, but I just want to show you guys something here really quick, okay? Give me one quick second. So.
And secondly, Tiff Macklem said there was no doubt.
So I want to show you guys a couple things here. Let's just for making money.
Canada today. What sort of information would the Fed?
I mean, I could be wrong in this, but it look like I'm like
willing to take such a preemptive move. Thank you.
Sorry.
Here's your first move right here, right?
Information would you need to see on tariffs? Would you need to?
This should be the larger move.
Actual movement of inflation.
Then like a finish up there, but I don't know if we go down there or down here. I think it's going to be later that we have the sharp correction in the 5 move, 5
Now we've just
waves. Hate saying waves.
And you can argue
we can do it right here, but because of earnings and shit, maybe it's at the bell they sell us down, then we get the larger move up.
Increases, and so I don't know how that shakes out. Nonetheless,
we could get the flat, we could get the sharp here and not here, but
that's just different. In addition, the trade, the kind of footprint of trade is.
So you get the impulse move up, maybe it's down. There's the bigger one up there, but that would be up here, right? And then maybe down and even higher, all-time highs. I guess if you're more bullish.
I just think the range of
I just think with option chain,
I don't want to start
grind, murder options, then back up again for the idea of a good report.
By the way, in 2000 and I guess 18, we didn't really know, and the range of possibilities very.
If I were to say anything about this here, it would be so. If you watch up there, I would say to you, just stay down here.
Retaliation. We don't know.
And if it comes down at all, just hit it to the upside.
Consumers. That really does remain to be seen.
Whether this is a flat or if this is a sharp correction, it doesn't really matter.
Price increase.
You're just hanging out. You're kind of just hanging out here,
just
to ram it up.
The best we can do is what we've done, which is study up on this and, look at historical experience, read the literature, and think about the factors that might matter. And then we'll just have to see how it goes.
Courtney.
He's very, so you got to remember, Trump hired Powell.
Questions. The first is whether or not there was any discussion about QT and the timeline for ending QT at this meeting. And then the second question is just...
Yeah, they said it in the fucking presser. No, it's not done.
...this week signaled anything to you about the state of financial conditions?
So, let's talk about runoff. So,
yeah, runoff is still going.
Data do suggest that reserves are still abundant.
Yes.
Remain roughly as high as they were when runoff.
Economy is good.
The federal funds rate has been very steady within the target range. We track a bunch.
This is positive, by the way.
Do tend to point to reserves being abundant. We do intend to reduce the size of our balance sheet to a level that's consistent with implementing monetary policy efficiently and effectively in our ample reserves regime. We're closely monitoring a range of indicators to assess conditions in that.
She's a bear, by the way.
Reserves are approaching a level that could be judged as, quote, somewhat above ample. I don't have anything to say to you about particular dates. It's just that's the process, and what we see is that rates do appear to be abundant. As always, we stand ready to take appropriate action to support the smooth transition of monetary policy, including to adjust the details of our approach.
Why the fuck would you slow down runoffs?
In light of economic and financial developments. On AI, it's a big event in the stock market and in particular parts of the stock market. I mean, what really matters for us is macro developments, and that means substantial changes in financial conditions that are persistent for a period of time. So I wouldn't put that label on these events, although, of course, we're all watching it with interest.
Simon.
Simon Rabinovich with The Economist. Thank you. You mentioned in your remarks that activity in the housing sector seems to have stabilized. At the same time, since your first rate cut in September, long-term mortgage rates have gone up by a full percentage point back above 7%. I'm wondering, kind of looking forward,
that's the long run.
Are you confident that activity will remain stable given how elevated mortgage rates
Yes, fucking sales are up. What the fuck are they? Sorry.
So, as you know, as we've reduced our policy rate 100 basis points, longer rates have gone up, not because of...
no, it's positive.
It's not principally because of expectations about our policy or about inflation. It's more a term premium story. So, and, it's long rates that matter for...
And they're buying on the long fucking... Oh, God.
I think these higher rates are going to... They're probably... hold back housing activity to some extent if they're persistent. We'll have to see how long they persist.
Now, I want to comments here. They're not telling you what's going on because they're 3 months behind, but they're fucking buying.
Through the whole family of asset prices, including interest rates. But in this particular case, it's all happened at a time when, for reasons unrelated to our policy, longer rates have moved up.
Jennifer.
New mortgages are booming right now. And the Fed doesn't report that. They lag it about 3 months.
You said you want to see further progress on inflation. Given that households appear to be unhappy with the elevated...
God, these people are fucking dumb as fuck. These reporters are dumb as fuck.
Until inflation has fallen back to target to cut rates again.
We've never said we need to be all the way at target to reduce rates. At any time, what we're doing is we're looking at the economy and asking whether our policy stance is the right one to achieve maximum employment and price stability. So I think if we would want to see further progress, but we think
I don't know how he deals with this shit all day long with these questions.
Is restrictive, meaningfully restrictive, not highly restrictive, but meaningfully restrictive. And so
these fuckers get their fucking data from FinTwit. You can tell these reporters.
Although we'd love to see that, of course, and we will.
And a separate question for you on tariffs. Curious whether the threat of tariffs and not knowing whether they could stick or not creates uncertainty for business here in the United States and could cause them to pull back, ultimately weighing on growth. Does the threat of tariffs cause you to ponder your growth forecast?
I want to avoid commenting even indirectly on the conduct of tariffs. It's not our job, and it's not our job to comment on the moves that people make. So I wouldn't want to criticize anything that's happening or really comment on it one way or another, praise it for that matter. It's just not our job. I do think that, we found in 2018 there was a lot of work done on trade policy uncertainty. Trade policy uncertainty, if it's large and persistent, can start to matter for businesses making investment decisions and things like that. That's not something I'm observing today. It's very early days for this, but I think that did matter in 2018-19, and it's one of many things we'll be watching.
Matt.
Thank you, Chair Powell. Matt Egan from CNN. Following up on Courtney's question from earlier about the stock market, how concerned are you, if at all, about potential asset bubble brewing in financial markets? How do relatively high market valuations factor into considerations about potentially lowering interest rates further? Is that something that's in the back of your mind?
So we look from a financial stability perspective at asset prices generally, along with things like leverage in the household sector, leverage in the banking system, funding risk for banks and things like that. But it's
VIX getting shanked right now.
Asset prices.
It was a high of 1850.
By many metrics.
We got a lot of VIX to murder. It's at 1678 right now. I don't see shit going on for VIX.
But we look at how resilient the households and businesses and the financial sector are to those things. So we look at that mainly from a financial stability perspective, and we think that there's a lot of resilience out there. Banks have high capital, and households are actually overall not.
Somebody needs to pull the fire alarm in that place.
These days. So that's how we think about that. We look at overall financial conditions, and you can't just take equity prices. You've got to look at rates too, and that represents a tightening in conditions with higher rates. So overall, financial conditions are probably still somewhat accommodative, but it's a mixed bag.
Richard.
Hi, Chair Powell. I'm Richard Escobedo with CBS News. One question for you. This month's statement notes that unemployment is stabilized at a low rate and that the labor market is solid. You walked through some of what's driving this, but I wonder what risks you see that might challenge your assessment.
Well, the things we discussed earlier, one is that there's a low hiring rate. And so that if there were to be a spike in layoffs, if companies were to start to reduce headcount, you would see unemployment go up pretty quickly because the hiring rate is quite low.
Velocity and unemployment.
I think it's worth pointing out that for lower income households, they're under significant pressure. And in the aggregate, the numbers are good, but we know that people at the lower end of the income spectrum are struggling with costs. And really, it's high inflation for the basics of life. It's not so much the inflation now, it's the price level, because inflation has raised prices. Inflation is now much closer to target, but people are really feeling that. But overall, this is a good labor market. You're at 4.1% unemployment. That's just a really good level, and you've been solidly there now for 6-7 months. And job creation is pretty close to a level that will.
Tell them how high wages are right now, Jay.
Given that there'll be much slower population growth.
One more question. Some of the uncertainty around immigration policy is, in your assessment, is that making it harder for businesses and the Fed to plan going forward?
We hear anecdotal reports, but I don't see. There's nothing in the data yet on that. But you hear that kind of thing about construction, for example, and businesses that are dependent on immigrant labor are saying that it's suddenly gotten harder to get people. But I know you don't see that in the aggregate data yet. But yes, you hear it anecdotally.
Nick.
Thank you, Chair Powell. Nicholas Jasinski from Barron's. The uncertainty is certainly a theme today, and I'm wondering, are there any...
No, it's your fucking theme.
Or as it relates to markets, the economy, what's going on here in Washington and beyond, or from lessons from history that may provide some...
We're at a soft landing, you fucking All right, I'll be quiet.
I guess I'd say this. Uncertainty is with us all the time. It is human nature, apparently, to underestimate how fat the tails are in a way. The possibility, we think of things in a normal distribution, and in the economy, it's not a normal distribution. The tails are very fat, meaning things can happen way out of your expectations. It's never not that way. I wouldn't, if you think about it, think about the first few months of the pandemic. That was uncertainty. Are we going to be able to reopen the economy? If so, when? How much of it? How long will it take? That was uncertainty. What we have now is a good labor market. We have the economy growing at 2 to 2.5%. Inflation's come down to now the headline inflation number was 2.6, and that's what the public experiences. We look at core because it's a better indicator of future inflation. So yes, the price level went up a lot for inflation, and people are feeling that, and they're not wrong. But so the kind of uncertainty we have is just a usual level of uncertainty about the economy, but then policies which are not for us to criticize or praise, really. Those are policies which people have been elected to implement. They're implementing them with a view to making a better economy.
So what Jerome is telling this guy is, we're not fucking uncertain about the economy. We're uncertain about policy. That's completely fucking different.
Or anything like that. Given that we have
the economy is fucking great. They want to they're trying to coax Jerome into saying there's uncertainty in the economy. There's not.
March cut still on the table, and then additionally, are you looking to see better than expected data on it?
And none of that policy has truly been implemented at this point. So how in the fuck are you supposed to start changing policy? It's pure insanity.
The economy's strong, the labor market's solid. Downside risks to the labor market appear to have abated, and we think disinflation continues on a slow and sometimes bumpy path. That tells me, and the other members of the committee, the broad sense of the committee actually is that we don't need to be in a hurry to adjust our policy stance. Your second question was?
Whether or not you need to see better than expected inflation data, or just inflation
Christ.
that roughly aligns with your current forecasts.
No.
It's one of those things, we'll know it when we see it, but more the expectation is that we will make continued progress. And I'm
going to interject again here. If you're a bull, right, you want to see inflation sideways and slowly down.
Continued.
If you ever see inflation fucking go down to 2% fast, it'll bounce, or it's going to go into disinflation. Both bad outcomes.
Is that better than our expectations? We expect to see that. It's just a question of when.
Yeah, 100%. God, these fucking
5-year review, you said the 2% inflation target won't be on the table. Can you talk a little bit about why? Is that because you think that's the right target, or is it because you don't want to move the goalpost mid-game? Or
no, you guys want a fucking recession is why, you asshole.
I think that goal has served us well over a long period of time. It's also the sort of global standard. I think that
that's the end of the bull run when that happens.
Changing that, you wouldn't do it at a time when you're not meeting it anyway. I would not look at changing it anyway, but I certainly wouldn't look at it at a time when you're not meeting it. I mean, there's just no interest at all in changing it. If I'm being at all unclear, we're not going to change the inflation goal anytime soon.
And 5 years ago, if I compare,
and he's not going to hit it either. He's going to try to go sideways as long as possible. The moment they hit that 2%, game over. Game over.
Because the solid labor market was so beneficial. Have the last few years changed your thinking about that?
So what we really said was that we wouldn't look at a strong labor market and raise rates unless we saw some evidence of inflation. So the thought was that we'd seen really low levels of of unemployment with no sign of inflation. So why would you preemptively want to put people out of work in the absence of any kind of any evidence that suggested that this was not a sustainable level? It was a way of acknowledging how much humility we have about the starred variables, especially U-star, the natural rate of unemployment. So that was that was an insight. We'll discuss that again. That'll be one of the many things that we discuss. But I don't think that insight is wrong. We didn't, we said, what we said was that, at times when inflation persistently undershot 2%, we would likely allow inflation to run moderately above 2% for some time.
There you go. Say it, Jerome.
Turned out not to be relevant to what actually happened. There was nothing moderate about the overshoot. It was an exogenous event. It was the pandemic, and it happened. And our framework permitted us to act quite vigorously, and we did once we decided that that's what we should do. The framework had really nothing to do with the decision to. We looked at the inflation as transitory, and right up to the point where the data turned against that. And when the data turned against that in late 21, we changed our view and we raised rates a lot. And here we are at 4.1% unemployment and inflation way down. But the framework was more irrelevant than anything else. That part of it was irrelevant. The rest of the framework worked just fine as we used it, as it supported what we did to bring inflation down.
We let it run slightly hotter as we normally do to extend the market.
Hello, Chairman Powell. Mark Hamrick with Bankrate. As you know, in the annual report from the Financial Stability Oversight Council, among the risks outlined is cryptocurrency. Could you talk about those risks now? And regarding individuals and households, perhaps distinct from the concern about the financial system, do you worry that speculation in this unregulated asset class could hurt their financial well-being, or do you think it has a place in a household's portfolio?
So our role with Bitcoin really is to look at, with crypto, really is to look at the banks, and we think it's, banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and sound. A good number of our banks that we regulate and supervise do that. The threshold has been a little higher for banks engaging in crypto activities. And that's because they're so new, and we don't want to make the mistake. If you're making a choice to conduct that activity inside a bank, which is inside the federal safety net with deposit insurance, then you want to be pretty sure that it's a safe and sound activity. So, we're not against innovation, and we certainly don't want to take actions that would cause banks to terminate customers who are perfectly legal, just because of excess risk aversion may be related to regulation and supervision. So.
And with respect to households and their inclusion in that asset class?
That's kind of it's not really our bailiwick. You want people to be knowledgeable about the financial engagements that they have, and that's why we have the securities laws that we have. It's why if you read a mutual fund prospectus or
just heads up here, it's already 3:19 in the afternoon.
Have the chance to.
They're really dragging this shit on. We're coming into earnings reports after the bell. We could experience some weakness into the close. Maybe one more pump and down.
We've actually spent a lot of time.
So watch out for this roll down into the close. I might not. I was thinking about taking a trade, one more trade right here.
For Congress to do.
But I think I'm going to wait for this close and see if I can jump in here for the reports. Stick with us. We're going. There you go. J Powell's gone. If you want to stick around, we got a couple of reports coming out. We're going to watch them after the bell. If they do report at 4 o'clock, we will cover them. Let me turn this shit off really quick, and let me turn that shit off, and let's talk about a few things here. If you're just joining us for the first time, there's a bunch of stuff to go over here. So here we go. Right, there might be two more pumps here. There's a pump here, and there's another pump down here after the bell. If you're trying to get buy some calls or whatever, zero dates. There's a bunch of stuff to talk about here. Number one. Jerome did not disrupt markets. Number two, we have a target up here that's left. Hasn't been hit yet. It's 607.50, 606.06. Even if we are to roll down, that upper target wasn't hit yesterday. It wasn't hit this morning. We hit one of the targets this morning in pre-markets, but not the second upside target before a market roll. So just be aware of that. Number two, we didn't get Bear Doom Powell. And as a matter of fact, he was he wasn't willing to answer any of he wasn't really going to be dragged into the politics or policy of Trump. Now, be careful. Trump might come out here and make some commentary on Twitter or Truth Social that could reverse us to the downside, because we didn't get a rate cut today. But, like, I got to tell you guys something. Like, these fucking reporters, they're like reading the newspaper and they're going on FinTwit, and the shit that they're asking is bizarre. It's bizarre. That reporter should have went out and looked at mortgage creations. I forgot, it's not creation, but it's mortgage originations under the new longer rates. They're booming right now. You can actually see it because the housing market is now bouncing. If you look at the reports from like Realtor.com, anywhere that's got, not the case Schiller, that's late, or that's delayed by like 3 months. If you look at Real Current, we're bouncing right now, and we also have new home buyers, or like people selling their 3 to 0% rated homes, and they're entering into new mortgages right now, more than likely because of time. Too many life changes. I got to go out there and I got to buy, right? I don't care what the rates are, right? The longer term run rate, or the long run rates that are higher. So we went through this just recently with the longer run rates and how it's bullish for the economy. Like, these fucking people don't know what the fuck they're talking about. And I don't know why that is. I don't know what the fuck that is. I don't know where they're getting their information, but it's just like regurgitated crap questions for Jerome. And Jerome is trying not to say certain things while saying certain things. And so he's like addressing pre-COVID. He's like, yeah, we let it run a little bit hot. That's how we do it. And that's what they're doing right now. They don't mind inflation where it is. And I got to tell you something. Like, when you see like velocity and inflation drive down quickly, they react to that. And even if they were to arrest it and it bounced off 2%, it would then fucking bounce straight up, right? So you don't want to see that shit. Anytime we're in a soft landing, you want to see like all this data just sideways, just like a little bit up, a little bit down, a little bit up, a little bit down. That's it. That's all you want to see. And there's all these people asking these questions. It's almost like they're intentionally going, "Don't you want 2% today? Fuck the market and fuck the economy and I'll fuck everything." Like, seriously, that's what they're, even if they don't mean it, that's what they're asking. Like, that's what they're literally fucking saying. It's like, so it might not be malicious, but it certainly is what they're asking. So it's bizarre. They know, or they don't think you know. They don't think Mary and Bob on Main Street know. Mary and Bob wanted it too, but they have no fucking idea what that means. Like, Main Street Bob has no fucking clue. Like, literally has no fucking clue what that means, or that imparts or implies. And we don't want inflation to rage either. We don't want vertical inflation. You don't want that shit, and you don't want it going down and slamming into 2%. Historically, the longer those data points trade sideways, the longer we have a soft landing and a healthy economy, which is the fucking mandate of our fucking Fed and the Treasury Department to some extent. I mean, there's someone in here is asking him, like, you're going to stop the runoff. Why would you do that in a good economy? Fuck is wrong with you? Like, I don't get it. It's bizarre. It's like some of these questions are the most bizarre. Like, it's like they're looking for a gotcha moment. Like, you're going to stop the runoff. The economy must be bad. And none of the data says that. So, you're going to stop QT now, right? No, you should get used to a higher, longer rate, right? You should get, if we have a good economy, and like pre-2007 and 2008, it was normal to have a higher run or higher rates. Like, it's normal. There was a time after 2007, 2008 where everyone said it's going to have to always be 0% rates or negative rates, like the threat of negative rates. Like, right now, things are good. Enjoy it. Like, seriously. I'm serious. Like, this is the most bizarre shit they're asking. They're looking for like a gotcha moment on this guy, and he's got nothing. The closest thing he's got is my concern is policy. That's it. And he even said none of that shit's real right now. We're in a roundabout way. He's like, none of that shit's real. We have not given tariffs to China. We have not given crazy tariffs to Mexico and Canada yet. Even though we're talking about it, remember that whole statement, take Trump seriously, but not literally. It's an important key point here. And we get wrapped up in all that, right? You got one day we come in the morning and Trump's like, I just fucking canceled all the fucking funding out there, right? Or the spending, right? And then by midnight, it's like, oops, we hit the wrong button, bro. Sorry. The funding's back on again. Funding off, funding on again. You know, like, yeah, intraday volatility, sure. Is it real, though? Not yet. They are, though. That's the thing. So we thought that, right? The kids couldn't afford houses. Fucking millennials are buying houses right now at the highest and best rate, or not a rate of buying of home ownership in history. In history. We're told that that's the case, but it isn't. They're not going and bitching. Like, I got to talk to you guys about something here. So what you and I are doing is, or what the algorithms in social media and the news sources are doing is, is someone goes on and says, I can't afford this, I can't afford that. Truly. And so we pick up on that, and we highlight that person. But then we get the data and it goes, no, dude, that's not the truth. That's a very small percentage of the population, bro. They're actually better off than pre-COVID. But meanwhile, you and I are consuming this shit, garbage. I was just talking to somebody in the Discord, and I was like, you could fucking love peanut butter and jelly sandwiches today. Google News will know that. They'll listen to you on your TV at home. You're like, we love peanut butter and jelly, right? Love it. And then you're going to get news shit that says peanut butter and jelly sucks. It's bad for you. It's horrible. Tastes like shit. You go on like Twitter next and you're going to get all kinds of a fucking feed saying PMJ sucks. Right? And it's not real. Anyone that digs into this shit knows that it's not fucking real. I'm serious. 50% of Americans make 50% of American households make $80,000 or more right now. Of the lower half of 50% that don't make 80,000, they make like 30% of that 50 make like 60 plus a year. Abject poverty is at a low right now. But what do? We go on fucking TikTok and we watch homeless population on a side street. And you're like, oh, it's really bad out there. It's terrible out there right now. Did you see that video? It's like making the rounds everywhere right now. It's just not the case. It's not the truth. Nice little pump right there, right? A little pumperoonie right there. So it's just not the truth. When you get into the data, it's just not the fucking truth. People are well off. They're bitching. Here's another crazy fucking thing for you. So, just like the rate of inflation, the wage inflation tracks it, right? So you've got inflation going up and coming down, right? You got wage inflation that went up with inflation, believe it or not. And then wage stagnation came into play, right? It did. It's back down with inflation. But what are they not telling you? Because you can lie with all this shit all day long. Like, oh, we're in wage check it out. We're in wage stagflation. Do you know what they didn't tell you? That the guy that went from 20 to 30 is still making 30 or probably 32 or 35 now. They're not telling you that. So they're just not telling you this. They're not telling you the whole story. And even when inflation is coming down, we're still in line with it with wages. You didn't go from $20 to $30, then back down to 20. That didn't happen. That's not what happened. It's not the truth. So you got people out there that are fucking loaded with money. That's why he's still doing the runoff. They're rich. They're fucking filthy fucking rich. My taxes just got increased again because they know I'm fucking rich. You might have anecdotal evidence, but that's not the truth. The truth is they're rich. They just don't like fucking paying $10 for eggs. But they can absorb it still. They still buy the fucking eggs. Look at eggs on the shelves. They're selling out, even in a shortage. People are like, I need those eggs. I don't care if they're $10. I showed up at Trader Joe's at 9 a.m. Give me my fucking eggs. I'm telling you, they got money. They're rich. They're just whining. Well, you might not. You might not be that person. But the rest of them are. The vast majority of them are. They're fucking rich. They're just not telling you. They're not admitting to it. They're not telling you that they're getting benefits from military service, right? After 9/11, they started giving everybody benefits. They're not telling you that they're making all this money. They're not telling you. They just don't want to tell you. They're claiming to be poor. Your parents are lying to you. They're rich. They're not getting fucked. I'll show you the data. Dude, so these kids that are screaming on the internet, they are getting fucked, but the vast majority of them are not. The vast majority of them are making money, or they're living with their parents, and now they have a ton of disposable income. These kids are not off as bad as you think. I'm telling you, they're not. I'm warning you, they're not. They're not as bad off as you think. They're just being pushed in front of you. The ones that are not well off enough, they're being pushed in front of you. But if you look at the data, these kids they're doing good. I'm telling you. Dude, I'll show you guys the data. This is what we'll do. So for tomorrow's stream, I will have the data available for you for kids. And it is shocking. And think about this. I want you to think about something. So if I'm not doing okay, right? I'm going to go to social media and I'm going to say, I just had to move in with my dad and mom. I don't make enough to have an apartment. I need roommates. And I'm going to bitch and whine, right? The kid that is making $90,000 a year, that kid, right? Who doesn't need to live with his parents, doesn't need to live with roommates. Guess where he's living? Nice little house out in the suburbs, right? Is he on your social media bitching and whining about it? Fuck no. He's doing great. Then you meet other kids and you're like, hey, you can't survive? Where do you live? I live in San Francisco, bro. Oh, so you got to have roommates? Yeah, bro. It's too expensive. Okay, so wait a minute. You want to live in San Francisco and you don't expect to pay high prices and not have roommates? How much do you make? $265,000 a year, bro. Oh, okay. So you could live somewhere else, couldn't you? Right? Somewhere a little bit more affordable. You want to live where? Beverly Hills? Manhattan. You want to live in the Village right now? Like, you got to see like where they're coming from, what they're talking about, where they have roommates. You're never going to get San Francisco. You're never going to get it, ever. It's a desirable place to live. But the real data disagrees with that zeitgeist that we consume. I'm telling you guys, I'll have that data for you tomorrow. I'll have the articles and everything for you. They're lying. And the algorithms are lying to you. And the people that are pushed in front of you is meant to gauge or get a reaction from you. It's not the truth. It's not the fucking truth. It's not the truth. I'm telling you, it's not the truth. It's rich people are rich. They got money. If they didn't have money, we would not be doing the runoff. I'm telling you guys. You would see stagnation in the economy. They claimed we had mass layoffs. That was bullshit too. It was all normal. Like, there's money. People are making money. They're employed. I'm telling you, like, if I was lying, this fucking market would be burning down to the ground right now. Like, none of the data supports any of those arguments. It's all for you to get mad. It's all it's meant for. There you go. You got another dip coming. Got a little dippy dip. Got another little dip coming in. So insane. It's insidious. You don't even like. I don't even know who to believe anymore. Like I'll go anywhere. I'll read an article from like Barron's. I'll read something from like Twitter. I'll read something on Reddit. I'm like, they're fucking know what the fuck they're talking about. They're selling something. I don't know what they're selling. They're like, they got to be selling something to get at you. You know, it's like, oh, God damn it, I'm pissed. Kids aren't doing well. No, they're not doing well in other aspects. They're getting dumber. But the data says they're getting dumber. Some data came out today saying they can't read. But they are making money. I don't disagree with the mental health crisis. I agree that that's real. I think there is mental health crisis with kids. But we're talking about money. And that's different, right? I agree with the mental health crisis. I agree that they're feeling like they don't have a voice. I agree with all that stuff. All that data says that. But the data about how well off they are is contradictory right now. There is like, you know, here's another one. I got another one good one. It's like the thing where like, this also comes down to like there was a time period in COVID, right? Where you should have jumped jobs. A bunch of people didn't. They didn't. So what? They bitch now? I only make $20 an hour still. Well, did you look for a job when wages were going up? No. Hey, rents are coming down. Did you renegotiate? No, they're still asking $5,000. I know they're asking $5,000. I know what the asks are, but they're willing to negotiate right now. They're just not telling you. Did you go and try to get an apartment? No, I didn't. I just stayed with my original landlord. So wait a minute. You didn't fucking jump jobs and you didn't renegotiate an apartment? Well, fuck you. Because a whole bunch of people did. They just don't talk about it. They bitched on socials. But some of them actually went out and said, you know what, I'm angry. I'm only making $20 an hour. But then they went and got a job that pays more. Serious. Or they renegotiated and they disappeared. And some people didn't. And those are the people that are still angry right now. Right now, when we get to that point where they're not making money as a whole, where they can't afford their rent, when that data comes in, I'll tell you, hey, they're fucked. But that data is not here right now. There's no data to support that argument right now. There's none. There will be, just not today. The market would be on fire if that was the case. We're at fucking all-time highs. We're trading 602.21. Well, no, no, you got your. Don't put words in my mouth. You do not put words in my mouth. I'm not that guy with pull yourself up by the bootstraps. I've been doing this fucking show for a long fucking time. And I talk to kids on this show frequently. And I'm like, no, I'm going to tell you what to do. You move to a place that's cheap. The old men that tell you pull your bootstraps up and your avocado toast and all that shit, they're assholes. There are things you have to do. Right? I hear the kids bitching. I get it. But you got to be able to move. You know what they did in the 70s and 80s, all these old fucking boomers? They don't tell you what they did. Do you know what they did? They moved to fucking New York City when it was a shithole. When they moved to Boston, the combat zone. When the Battery in New York was a dump. They moved to Santa Monica, California, when it was a fucking burned, or not burned out, but a sleepy, shitty town. And they bought shitty apartments or houses, and they built them. There are towns all over the U.S. you can do that at right now. All over. I know they don't tell you that today, and you might want to live in those built-up places today, but you can move to fucking Detroit, Minneapolis, fucking Philadelphia. I got a list of them. You can move there, get a cheap house in your good remote job, have a cheap mortgage, build equity, and guess what? Do pretty well for yourself. You can even move up and out of that position if you're young. You get what I'm saying? You flip that house. Buy that house for what? 50 grand, 100 grand? Sell it for 200. Can't do that in some places like Santa Monica, right? On that scale. But you can do it somewhere else. It's a myth right now. Right now, today, it's a myth. We were in the danger of that happening during COVID. There was that danger. We did have that data during COVID. But right now, that is not the fucking data. When we go back to that data, it will be true. But right now, it's not. Today, it's not. And we are trading a fucking stock market. We are. If you're right and I'm wrong, this fucking market should be burning right now, and it's not, is it? It's not. It isn't. It's your job to know the difference. When it is and when it isn't true. It was true during COVID. People had to go home, live with their parents, right? They're all back working now. They're all making money. I'm telling you. It's the truth. I got nothing to sell you. I got zero to sell you. Need a free fucking show on the fucking internet. I should be selling Ginsu knives, fucking NFTs, and fucking shit coins, exit scam coins. It's just not the truth right now. It's just not right now. It was the truth. We did have that data, but that's not the truth right now. And you got to be aware of that, because if you were living in that data, this is the worst part, is if you're living in that data right now, like, hey, the bootstraps and all that shit, it's not the truth right now. You're losing money because you're shorting something that is not there. It really is not there right now. It will be. We'll go back to that. They'll be fucked again. And you'll hear them say, pull your bootstraps up, and they're assholes for saying that. And they shouldn't have said that at that time period, but right now it's not the truth. Yeah, Ginsu knives. That's what all those guys are doing right now, right? All those fucking influencers and shit. Fucking influencers, man. Fucking brutal. I always what's the difference between because not everybody that's on a stream or whatever is horrible or makes videos or shit are horrible. I was watching Red Letter Media last night, and they were talking about a new Star Trek movie, and they were like, oh god, then they brought up the influencers, and they just go on the red carpet for this premiere of the Star Trek movie. They're just like, oh yeah, it's the best ever. Best ever. Best movie ever. Let me fix my hair for you, and I'm going to bring on my fans and all this stuff, and the fans of Star Trek. It was so hilarious because you're like, yeah, that's what those people are. They're selling a fucking story to you. They're literally selling a fucking story to you for views. Yeah, we'll get there. We'll get that bad data, Darth Moley. We just don't have it right now. There was a nice pullback in the housing market, but it's bouncing again. Some of that data was when they did those two cuts, they really did arrest a bunch of that shit. Like housing markets leveling off right now. There's no bad. There's some bad data, but it's not like Wolf Richter was comparing the bad data and good data on a micro scale to 2007, 2008. We're not there yet. Like all the small type, like when you look the minutia of data, because these guys are selling that story too. You see that story being sold here, all over the place, like debt, credit card debt. They don't want to tell you anything else but credit card debt. Americans have more credit card debt than ever. They don't tell you the rest of it, though. They don't tell you the rest of it. They don't tell you that the banks are loosening their financial conditions, that they want people to have more credit right now because they can absorb that fucking credit because they're fucking loaded with money right now. I'm serious. I'm dead serious here. There's like this company that there's like all these influencers on YouTube, and they like, so I get like, it's like these influencers on YouTube right now. They sell this like knife set. You'll see like influencers selling them all over goddamn YouTube. And there's some other stuff that they're selling out there. I get emails every fucking week, dude. I get probably 3 to 5 emails to fucking sell shit to you guys every week. I say no to all of them. I'm like, nope. Oh, gambling? Nope. You want to play video game gambling on the show? You want, like, with a boring day, have a little game going on the bottom of your screen? You want to push this fucking, like, new, like, finance thing? Like, the finance thing they always pushed me is they're pushing NFTs, coins, and a lot of times, like, platforms, like trading view type things. They're like, hey, can you, like, just show this and, this fucking platform or that fucking platform? I'm like, no. I'm telling you, well, there is, I'm not going to tell you that everybody's well off, but the size of the group of people that are not well off is very small right now. When I spent a day here about a week or two ago, it was about 2 weeks ago, right? About a week or two ago, and I went through that fucking data with you guys. People that are here every day, we're here for that show. Because people were calling me out and saying the consumer is not doing well. And I was like, oh, let's fucking do it then. I'll show you the actual fucking data. And they are doing great. They're doing fucking great. So like, so even the people that are not doing great is small. It's very, very, very small. Like even the size of like abject poverty, people in abject poverty is very small. If you count yourself in that group, if you're watching the show and you count yourself in that group, you are part of a very small minority right now. You are. Maybe there's reasons for it. Sick family member, you're sick or have been hurt, could be where you live. Now is a time for you to be looking to make more money, or at least in our economy. Be trying to like lever up, look for a job in a different place, move to a place that's cheaper living. We're in it right now. We talked about this morning too, right? We're in a bull market. Like the economy, when it's in a bull market, you take advantage of it. You don't want to come into an economy like we like sit here and whine about it, and then we actually go into a recession. As a matter of fact, I made more money in recessions than I did in great economies. I don't know why that was, but my job was in high demand in recessionary environments. Another thing that I did was I started a lot of businesses in recessionary environments. Because it was cheaper to start a business in an inflationary environment. You'd be surprised how counterintuitive a lot of stuff is. You'd be very surprised how counterintuitive stuff is. But lever up. Now's the time to do it. I mean, literally, lever up. You got to. You don't want to you can't not be putting risk on in a bull market to go into a bear market and then be more conservative. Well, we're in a bear market. I understand that. You need to set wealth preservation, right? But you're not, shouldn't be doing wealth preservation in a bull market. And if you can't do that in real life, you should hand your money over to a financial advisor to manage your money. Put your shit back into a 401k so they can make you money. All right. Now let's talk the close here. Shit. Let me see what I can scare up here. We got after the bell, we got Tesla. So we're going to pop Tesla on the screen. Wait a minute here. Hold on here. I'm doing this wrong. Give me a quick second here. I mean, dude, they tell you guys like that. They fucking tell you guys. I don't know why this is. I don't know what it is. I don't know where it comes from. But you literally, it's like the opposite of whatever they're telling you out there. It really is. Well, I don't know if that's always the case, but they don't stop telling you that. Maybe I need to rephrase that. So you got Tesla, Microsoft, and Meta. It's like stock and trade. It's like a bear's stock and trade, I guess. Here, hold on, bam. We're gonna go to earnings right now. Yeah, I get the wrong shit up here. Like the stock and trade gambling season. So like the stock and trade. So on your left here, this is Tesla. And give me one quick second here. So let me explain this better to you here. Hold on. I want you to think about this. Hold on one second. What the fuck is going on here? So I want you to think about this. I want you to, if you're still listening to this show, I want you to think about this. How long of a market participant have you been? How long have you been in the stock market for? First thing you should ask yourself: how long have you been in the stock market for? Is it just COVID? Was it just COVID? If that's the case, right? That means you went through a cycle. That means you went through a cycle where a bear told you information that was true. Okay, so a bear said to you, I don't know, fucking boomers don't like you. Right? As a matter of fact, work reform on Reddit got big during COVID, right? So you have a subreddit on Reddit of angry young people, right? And it was valid. It was valid during COVID and thereafter. Right? So you're trading the stock market, and the stock and trade of a bear is what? Kids are they can't afford anything, right? Am I right? Right? Let's go 1 minute right here. So it's true data, right? Then you get to things get better, right? Economy improves. Well, what does that bear do when we get to the good economy? Does that bear come out and tell you, oh, guess what? The kids are better. They're not going to tell you that. They already told you the kids are not better, right? So what are they going to do? They're going to continue on with the same fucking story, aren't they? They're going to tell you what? The kids are not all right. The kids can't afford shit. Kids aren't making enough money. Just so you know, pull up your bootstraps. That triggers you. You're angry. I fucking hate boomers. Stock and trade. Get you angry. Will it be true again? Yeah. Is it true today? No. Just not the truth today. All right, here we go. Just a second here. I'm trying to get this fucking thing. What is that? 1 minute. That's a good interval. We got Microsoft here. We got Tesla over here. Place your bets. You want to know why I don't have a ton of followers? Why I don't have 100,000 followers or 1 million followers? Because I tell you the fucking truth. I should just start fucking lying. Sometimes I tell myself that. I'm like, I should just fucking lie. Tell them everything is horrible. They'll start following me. Tell them the stock market's going to crash tomorrow. Get more followers. Meta on the move right now to the upside and the bell. 3 minutes left to the close. I'm going to put on the financial juice here so we can hear the news squawker talk about it. No one wants to hear what I have to say. They want to hear like the best or the worst, right? If your favorite stonk is coming into a top, they don't want to hear me say sell. And tell you, they're like, fuck you, Cap. Stock's going down to the depths of hell, and I'm like, buy. And they're like, fuck you, Cap. I want to hear about the doom. Meanwhile, you're not buying the dip, and you're not selling the top, are you? That's the reality for most people. It doesn't sell newspapers. Think about when the market is crashing and it's a bottom. It's like max fucking doom. There's nobody on CNBC telling you to buy the dip. They're like, oh, red graphics everywhere. Meta squeezing right now, trading 677.83. I wish I was a fucking psychopath. Sometimes I do. I'd be fucking rich doing this shit. I wish I was a monster. I do. I'm not joking. I'm serious. Serious, a fucking heart attack. Like, I can't do it. I wish I could, but I can't. If you think I'm lying, right? Go to wolfstreet.com. Go to the blog wolfstreet.com. Go spin that shit in one of his posts. Any of them. Go to wolfstreet.com. Do yourself a solid. Go to wolfstreet.com. Go to his newest post. Go in the comments section. Make an account and go in there and say the kids can't afford anything. See what he says to you. There's another guy. He'll give you the straight. Ooh, look at that daily trigger down there. We got a weekly down here for Tesla. I don't see anything from Trump here.
At 4:05 p.m. Eastern Time, we get Microsoft second quarter 25 earnings, estimated EPS at $3.12, estimated revenue at $68.9 billion. Tesla fourth quarter 24 earnings, estimated EPS at 75 cents, estimated revenue at $27.21 billion. And Meta fourth quarter 24 earnings, estimated EPS $6.78, and estimated revenue at $46.98 billion.
Should I go get a whiskey? It's been a long ass week already. It's only Wednesday. Let me get in the market chat and ask those guys.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
Seeing Microsoft Q2 earnings coming through now. Revenue is a beat to $69.6 billion on estimates of $68.92 billion. EPS at $3.23. So that is a beat on estimates of $3.12. Cloud revenue, $40.9 billion, a miss on estimates of $41.1 billion. Intelligent cloud revenue, a miss as well, $25.54 billion on estimates of $25.89 billion. As for Azure and other cloud services revenue, X4X, that's up 31%. So again, to recap there, headline revenue for the second quarter for Microsoft was a beat, $69.63 billion on estimates of $68.92 billion. EPS was a beat by around 10 cents as well at $3.23.
So you got beats across the board. Some of the non-headline stuff a miss on Microsoft inside of those of the EPS and the revs. Microsoft currently bleeding right now, trading 421.94, 415.26. I might want to buy some of this. The weekly target is 415.26. We can get down here. I think I'm going to buy it. Trading 418.20 right now. Let me bring up Microsoft. No. Go, stay down there. Stay down there, Microsoft. No, I want to buy the stock, not options. Let's see if I can grab some. I want to see if I can grab 410.25. Was that 417? See if we can catch a low here on Microsoft. Tesla bleeding right now, trading 380.07. Come on, Microsoft. Come down a little bit more. Tesla trading 379 right now. SPOO's weak right now. Or not too bad. SPOO's isn't too bad right now. Tesla coming down into its weekly trigger at 370. This is the first target for Tesla. 370, then 340.
So Tesla's fourth quarter earnings coming through. So adjusted EPS at 73 cents. That's a miss on estimates of 76 cents.
Uh-oh.
EPS 66 cents. Fourth quarter gross margin 16.3%. Fourth quarter adjusted net income at $2.566 billion. Operating margin 6.2%. Fourth quarter free cash flow at $2.031 billion. Tesla fourth quarter adjusted EBITDA at $4.922 billion. So Tesla expects energy storage deployments to grow at least 50% year over year in 2025. Tesla fourth quarter revenue
Tesla blooding down to its first target of 370 right now. If you're a bear, congratulations. Microsoft recovering. Meta weak right now.
So Tesla expects Cybertruck eligible for IRA consumer tax credit.
Tesla target hit.
Record deliveries in China in the fourth.
370. 340 is the real target down here. 340, 342.50. Oh shit, are they going to do this today? Oh man, Tesla.
Expecting earnings from Meta.
Tesla right now getting hammered. 365.64, blasting through its weekly. Are we going to do the 340 today? Meta's weak right now. Not seeing any data on Meta right now. Looks like Tesla had misses.
And at 4:10 p.m. Eastern Time, we get IBM's fourth quarter 24 earnings, estimated EPS at $3.75, and estimated revenue at $17.54 billion.
Meta crawling back right now. I want to buy this on Microsoft. I want like 415, and I want 410. I've got 12 in, but 410, 12 somewhere in there. I'm trying to buy this one right here. I think Microsoft recovers by open tomorrow. Tesla is going to trade that 340 in my viewpoint. Tesla's fucked. Meta coming back right now on some weakness, but no report yet. I think Microsoft recovers by open tomorrow. Believe it or not, I got to look at the guidance on them though, because of the whole LLM bullshit. See if we can catch a sweep lower here. I'd really like to see a sweep lower on Microsoft and then a recovery from their guidance. Meta pulling its pants back up. Tesla super fucked. Thoughts on NVIDIA? Every low buy. I am an NVIDIA bull. Do not be listening to these fucking bears. They're going to be people telling you like, oh, we're not going to trade. We're going to rotate out of fucking NVIDIA, right? And then fucking a month or two from now, it's going to be cranking with the rest of the market. I am an NVIDIA bull. Any lows on NVIDIA, take those sweeps. Tesla recovering, now trading 373. They hit their first target. So Tesla's first target was 370. Their second target would be 340 next week. Currently, they're recovering off of that 370 target.
Yes, at $3.92. That's a beat on estimates of $3.75. Revenue, $17.55 billion. That's a beat on estimates of $17.54 billion. So IBM outlook fiscal year constant
IBM looking good.
Growth of at least 5%. And fiscal year 2025 revenue view at $65.45 billion.
If you're a Tesla bull, like you should be buying like 370 and 340.
Gross profit.
Any deal down at 340, 370, you DCA this shit down here. I'm still bullish on Tesla to the end of the year. So any trip to 370, any trip to 340, you buy it.
So IBM's outlook for fiscal year free cash flow.
Not financial advice. I think we'll go down. I think we're going to hit that 340, though. I think we're going to hit it. I'm going to wait on Tesla. I don't own Tesla. Come on, Microsoft. Turn around.
Now stands at over $5 billion inception to date, up nearly $2 billion from the third quarter.
Tesla recovering on 370. Makes me want to buy this close on SPY too. I can't trust Tesla though. I'm with you, Haas Papa. 100%. I haven't bought SPY yet for the year either. I would prefer SPY go down to get Tesla down to 340. Like, now's the time to be buying stonks and then buy the ETFs like in a week or two. In my view, fuck the ETFs right now. Or maybe April for ETFs. I want to own stonk right now. Tesla already coming back to 380. Back to the scene of the crime right now in Tesla. You can do cheaper stonks. You don't have to do Tesla. There are all kinds of like stonks that mirror Tesla. You don't need to do just Tesla. There are all kinds of EV stocks that are beneficial when Tesla takes a nosedive, comes back, they trade right alongside Tesla. Just buy some kind of shit stock. Microsoft coming back now, trading 430.07. Yeah, we got GDP too tomorrow. Tesla going back down now. We're going to get Meta right here? No. All right, we got 2 minutes left. If we don't get a Meta report here in the next 2 minutes, I'm going to probably get off the stream. If Meta bloods, I'll come back and try to buy it. So just a couple recap here. Tesla with a miss. Microsoft with a beat. Of course, now we're looking at all kinds of other bullshit. They're probably going to look into their guidance, find out if it'll recover or not. I do expect Tesla to trade that 340 today, tomorrow, guidance, whatever it is the meeting is with Elon. I am bullish here in Meta too. Bet Meta should go up and then sell down. Meta recovering now. 1 minute left. I thought about buying some zero dates for tomorrow in a recovery here. Could get a nice little bump up into tomorrow. Market's closed. That's it. I missed it. No trades for me. I got an order in for Microsoft. If I catch a fill, I catch a fill. All right. Thank you for showing up today to the stream. I appreciate you all being here. I'll see you all tomorrow at 9:30 in the morning. I appreciate you liking the videos, subscribing today. Feel free to show up any day of the week. 9:30 in the morning, we're here. And I'll see all of you 9:30, baby. Halfway through the week, Meta cranking after the bell. Trading 678.